right, testing. Just test this out real quick. Make sure we're good here. Testing.
Yep, we got you.
All right. All right, guys. Thanks for joining. Welcome to the 5th week of our investing trading course. This week we got a couple guests. We got the regular Penny Slayer. He's been killing it. He's been like a co-host. Big fan of Penny Slayer and his Discord. Please check that out. We got Stock Curry, a legend. He's got a great YouTube channel. I watch his videos. Great information, great analyst, has experience in large investment banking. I got his YouTube page up here. Make sure you give my man a follow. Really, it's hard to find good YouTubers that do due diligence and are sincere and have great information. I think Stock Curry is one of those guys. I've watched a lot of his videos and I've learned quite a lot. Hey, Stock Curry, man, thanks for joining. Penny Slayer, thanks for joining. Give a quick introduction of yourself, Mr. Stock Curry.
Absolutely. So thank you, first of all, for having me on. I really appreciate it. It's great to be on the channel today. Give you a little bit of my background. I used to work for some investment banks, specifically Merrill Lynch and Morgan Stanley, and later in my career, a little boutique firm. And I also have over 20 years of trading experience on my personal side. People say, oh, I work for an investment bank. It doesn't always mean much because there's a lot of different roles in an investment bank. Even if somebody says they're an analyst, that still doesn't necessarily mean that much because pretty much every single person out of college gets started with the job title analyst.
Yeah.
So to give you a little bit better ideas to what I actually worked in, very specifically early on in my career, my department was securities lending, and I did a lot of programming, trying to find market inefficiencies and arbitrage situations where our traders could take advantage of different market inefficiencies to make money with very little to no risk. In addition to that, later on in my career, I was more focused on the technical side of things, where I spent a lot of time working on programming and algo trading online platform that would essentially use technical analysis such as EMAs and Elliott waves and Bollinger Bands and all that sort of stuff to algo trade based upon whatever criteria was set up by the user. So that's my background. It's a lot of options and technical analysis, market psychology, and not so much on the fundamental side of the house. But I think we've got Tom Nash joining later, and he can certainly speak to that. He is the expert on that.
And just a quick shout out to my man Amit. Amit's got a great YouTube channel. Amit is really on the come up. If you want to know anything in the world about Palantir, for sure, Amit is one of the leading channels. Great guy overall. Please make sure you follow his channel here. So for me, I've been trading and investing for over a decade. I worked in upper management, and that's kind of like what I've been doing most of my career. But I went back to school to become a financial analyst, not for career related, just because, just as a hobby. I just enjoy this stuff. I enjoy investing. I enjoy technical analysis. I enjoy swing trading, doing due diligence. So I love it, man. And I think that's why I vibe with your channel. So you could tell you come from a place of experience. So please give this guy a follow, check out his stuff. And he's going to do a great presentation today on options. I got to get one of those.
Hey, I love that.
I got to get also a fake cardboard thing that shows like the plaque, be like, and put on the bottom, in the future, maybe like in 10 years, or I don't know how long it's going to take me. So go ahead. The floor is yours, Mr. Curry. You can share your screen and do your presentation and give us a nice little intro on options.
Absolutely. Thank you so much. So today we're going to explain options, and there's a lot of different people watching right now. Maybe you have some experience with options, maybe you don't. I'm going to start with the very basics, because what I found is a lot of people will trade options, but they don't actually know what they are, how they work. So I think going over what an option is will help explain a lot of the what if scenario questions. So let me see if I can get the screen sharing going right now, and we'll see how well this works.
All right. Hey, shout out to my man, Greg. We spoke last night for like 3 hours. If I'm ever in his neck of the woods, we got to go to Sebastian's and get some food.
Nice.
Okay. Okay, here we go. There you go.
Great. So to go over the basics of what an option is. An option is a contract that gives the buyer of the contract the option, but not the obligation to buy or sell a security at a specified price by a specified date to the seller of that option. So go into a little bit more detail. We'll split this up into call options and put options and kind of fill in some of the blanks here. So a call option is a contract that gives the buyer of that contract the option, but not the obligation, to buy a security, that is a particular stock, at a strike price. That's a particular price the security is trading at, and by the expiration date of the option from the seller of the option. So that's a lot, but kind of unpack it a little bit. Let's say I own 100 shares of Apple, and let's say that I'm willing to sell Apple at $200 a share, just throw out a number. And you think Apple's going to rise above $200 a share by a set date, say the end of this month. So you go in and you buy an option from me to buy Apple at $200 a share by the end of this month. And then at the end of the month, if Apple's trading at $220 a share, we now have a contract that gives you the option to buy Apple from me at $200 per share, even though it's already trading at $220. And this could be a win-win for both of us. Maybe I want to reduce my risk, collect a little bit of premium on the option. So I'm like, yeah, sure, I'll sell you the shares for $200. And you're like, great, I'll buy them for $200 because I can go sell them on the open market for $220. And so that's why options exist. That's kind of how they work. A put option is the exact same thing. It's just the opposite. So a put option is a contract that gives the buyer of the contract the option, but not the obligation to sell a security at a strike price by the expiration date to the seller of the option. So if I said, let's say, okay, I'm going to buy Apple, I'm willing to pay $200 for it, just say. So I'm going to go out and I might sell a put option. Now, all option contracts, not all, but most of them are going to run at 100 shares. So 100 times $200 would be $20,000. So I'm going to take $20,000 of my money and I'm going to set it aside. The broker's going to hold on to it. It's going to be a cash security and what's known as a cash secured put. And then I'm going to sell this put option to somebody. And then the other person maybe owns the shares, is like, hey man, Apple might go down. I'm going to go ahead and just buy this put option to save myself in case Apple goes down so I don't lose too much money. Let's say Apple's currently trading at $220 a share as an example. So I go in and I sell that put option. Now the buyer of that has the option, but not the obligation, to sell his shares to me at $200. So come the expiration date, if Apple's trading at say $190, the person who bought that put option is like, yeah, I'm going to go ahead and sell my shares for $200 because if I go sell them on the open market, I'm only going to get $190. So he sells the shares to me for $200. Now, because I sold the contract to him, I have to buy those shares for that $200 per share. So my broker, which is holding my $20,000, is going to give the $20,000 to the buyer of the contract, and then I'm going to get shares from the buyer of that contract. So that's how put options work. So that helps explain a lot of the what if scenarios. Well, what if my option expires, out of the money? What if my option expires in the money? What if, what happens? Can the person exercise the contract before the expiration date? Well, yeah, absolutely. They can exercise it anytime. Do they have to exercise it? No, because they have an option to, not an obligation to. So sometimes your option might be, maybe, a few pennies, like 1 or 2 pennies, in the money is what they call it. You might not want to exercise it because you just don't want the shares. Maybe you were just trying to speculate, or you just don't want to hold over the weekend because most options expire on a Friday. So you don't have to actually exercise the contract. So if you don't want to exercise the contract, so you bought an option, you don't actually want to exercise it, you can actually call your broker and enter what's called a D&E order, or a do not exercise order. That means even if the option expires of the money, your broker's.
Uh-oh.
Did his mic go out?
Yeah, I think he totally went out.
Oh,
That's terrible.
that is.
No, right in the middle of that. That was awesome.
I know. Let me see if I can hit him up on Discord real quick.
Okay. Technical difficulties. Oh, there he goes.
Oh,
He's
okay.
back.
You're back.
Yeah, you got to unmute yourself. Stop.
You got yourself muted.
There you go.
1, 2, test 1, 2.
All
Yep,
right,
you
you're
got
good. You're good.
You can
Right,
hear
right. It was like right at the end of the movie. We were about to find out who the killer was.
Yeah, let me
Hey.
see if I can get a better mic here. Hold on 1 second.
Okay.
Test 1, 2, test 1, 2.
Sounds
Perfect.
good. Sounds good. So, quick question, not to interrupt you. Good information. A question that I get a lot. People ask me, what is the difference between futures and options?
You know, it's a really, really good question. So on a options contract, you have, it's called a derivative, meaning the price of that contract is going to change based upon the underlying asset.
Right.
Now, the underlying asset could be a stock or a security, but here's the really crazy part. The underlying asset could also be a future. So
Okay.
not only can you trade futures, you can actually trade options on futures.
Got it.
So
Got it.
a future is essentially a contract that says, hey, I agree to pay a particular price in the future. The big difference between an option and a future is one keyword, which you can see on the screen. An option is a contract that gives the buyer of the contract the option, but not the obligation. On a future, you have the obligation. There's no option.
Okay. Got it. Got it. And in the future, you have to do it. You can't do it before the date, right?
Right. On the future, on that expiration date, it will occur no matter what.
All right. All right.
And this is actually, funny enough, was a problem a few years ago, back when oil became like negative $60 a barrel. And what ended up happening was a lot of speculators had been trading oil, making money on it. Well, they tried to close out their contract in the last day, and there were simply no buyers. There just weren't any buyers anywhere. And so a lot of people like you and I were sitting there holding oil contracts. And I was like, I don't, what am I going to do with, barrels of Brent crude oil? Like, I'm not going to store in my garage. So that actually was a major problem, and brokers had to step in and everything. So yeah, futures can be dangerous if you hold them to expiration, because you have to take delivery of that underlying asset, whatever it is.
Excellent. Excellent.
Okay, so this is what a contract is. It looks like the audio video went out right at the last second. Luckily, I've got extra cameras and microphones in my studio, so let us carry on.
I had a contingency plan just in case, though.
All right, excellent. So did I.
I had right here. I was gonna like, okay, I gotta pick up. I got a presentation just in case.
Well, it looks like we are back on track.
I like to hope for the best and prepare for the worst. Good. Good.
Okay, so now that we got all that, we're back on track here. What I want to do now is I'm just going to pull up a new whiteboard here, and let's just have a little bit of discussion.
Okay.
So one thing a lot of people don't understand is when you are trading options, only about 20% of all options actually expire in the money. Okay, 80% of options expire out of the money. So here's what ends up happening a lot of times is, let's say I'm going to be the buyer of this. We'll use a call option, for example, make it easy. And then over here, we're going to have the seller, and we'll kind of explain what happens here. Okay. So let's just say our option is going to be AAPL, and it's going to be a $200 call option. All right. And then over here, what I'm going to do is we're just going to put the closing price of AAPL at expiration. Okay. So here's what might happen. So let's say at some point we do this, we've got, this purchased or whatever. And let's say the premium for that option is $2. We're just going to give that as an example. Okay. So I'm going to be a buyer of an option. I'm going to go pay $2 for this option to buy Apple at whatever the expiration date is. Say it's a monthly one, next monthly expiration. So where does that $2 go? If I pay $2, where does it go? Well, the $2 goes to the seller of that contract. So this guy's going to actually collect $2 from the buyer. Okay. So the money moves from the buyer to the seller. Now, the next question is, okay, let's say Apple expires at expiration, and let's say the price is $198, right? Now, I've got the option as a buyer to buy Apple for $200. Now, will I buy Apple for $200 from the seller if I can go buy Apple on the open market for $198? No, absolutely not. That makes no sense. So I'm just going to let this expire worthless, since the call option is more than the price of the shares on the market. This $200 option is worthless. So I lost $2. All right, so now we go again, and we're going to do it again. And this time, I'm also going to pay $2 for a contract. And in the same way, this is going to end up over here, and the seller's going to collect another $2. And this time, the price of Apple is going to finish at $195. So once again, it's below the option price. I'm going to lose my $2. Okay, so now we go again, and I'm going to pay another $2. The seller's going to collect another $2. And, you know, third time's a charm, right? Well, let's say this time it closes at, call it $199.99. Well, it's still below 200. I'm not going to exercise that. So we keep going. We're going to do this again. Another $2 here, another $2 for the seller. And in a minute, you're going to understand there's actually a whole strategy to this. So let's say this time it closes at, 180. Whoops, that was a big loss. So it's still not going to go through. Okay, we're going to do it one more time. We're now in month, what are we in, month 5? Okay, so this is the 5th time we're doing this. So now we're in month 5. Okay, and this time, let's say Apple closes at, let's call it $205. So now Apple's above our strike price. The $200 is the strike price. So now I'm the buyer. I want to buy Apple. Am I going to go on the open market and pay $205 for it? No, of course not, because I have the option to buy Apple for $200 from this seller right here. So what's going to happen is this option is going to exercise. So at this point, what's going to happen is I am going to send the seller $200 per share, right, from my Apple shares. And the seller is going to send me, he's going to collect $200 for his Apple shares. Okay. The shares then are going to move from the seller to the buyer. So now the buyer holds on to his shares. Okay. Now, to help explain the math a little bit better, let's assume that the seller bought the shares on the open market to give to the buyer, and let's assume the buyer immediately sold those on the open market. So if that's the case, the buyer immediately sells his Apple shares on the open market for $205 because that's the current price of the shares. And the seller had to buy them on the open market for, say, $205. Okay. So now if we take a look at a little bit of math here, what you're going to notice is just on this portion of the contract, the seller lost $5. And the buyer of the contract actually had a $5 profit, as you can see here. Okay, now here's what ends up happening. So just on the actual purchase and sale of the shares, the seller loses $5, the buyer gains $5. But take this a little step further. Remember, you had to pay $2 for this contract. So in other words, the buyer made $5 from a $2 investment. So if we do the math on that, it's a $5 profit from a $2 investment. It's a 150% profit on this particular option. Now, here's the crazy part, right? You'll see people and they'll say, okay. And then what somebody ends up doing ultimately is they go on to, Twitter, or they go on to YouTube or somewhere, and they say, hey, look at this, man. I just made 150% profit by doing this particular option. I'm a genius. Look at all the money I made. Woohoo. The problem is, if we actually go through and do the rest of the math, what you're going to find here is we actually have a loss of 2, a loss of 2, loss of 2, loss of 2, loss of 2. That's $10 loss. you have a $5 profit. Your net is a $5 loss, right? So over the course of 5 months, you lost $5. Or for your $10 invested, your $5 loss, you invested 10, you lost 5, you have a 50% loss. Okay. Now, what about the seller of the contract? Well, if we just look at this leg right here, you lost $5 off of your 200. It's 2.5% loss, right? But I mean, you gained $2, so really it's 3 divided by 2, so it's like a 1.5% loss. But if we look over the full course of the whole time, over the last 5 months, okay, oops, that should have been a plus. If we look over the last 5 months, it's plus 2, plus 2, plus 2, plus 2. That's $10 total gained in premiums. You lost $5 on the actual sale, but your net over this whole time is a $5 gain. So for you as a seller, what you actually end up with is a $5 gain, right? So what ends up happening here altogether is a YouTuber or somebody on Twitter is like, I made 150% profit. Well, in reality, they have a 50% loss if you look at their total amount of trades over the entire last 5 months. So the seller, on the other hand, they may have lost $5 on this one transaction, but they gained $10 in premium. Over the last 5 months, they got a $5 gain. And so you have to understand that when you look at a one time where you have a particular profit loss, right? You got to ignore these major profits that people kind of show. And you have to look at, okay, what are they actually doing over time? And over time, buyers of options lose money. Almost always. Over time, buyers of options lose money. And sellers of options will make money over time. And again, the reason for that being that you have an 80% chance of this option expiring out of the money, only a 20% chance of it expiring in the money. And by the way, if you guys go further out, let's say you're looking at not a $200 Apple call option, but a $250 Apple call option. The further out of the money you go, the lower the chances of making money get. So you might get down to 10% or 1% chance of that option expiring in the money. But if you're at the money, generally about 20%. Now, here's the beautiful thing about this. If you're a buyer, like most retail traders are, they just go buy options and they try to make money. And what they end up realizing is over the long run, they actually lose money on options. But as a seller of an option, this is a way of making money, because the reality is you probably didn't buy these Apple shares at $205 on the open market. You probably bought them some time ago at maybe $180, right? And so you buy the shares at $180, and then you think, you know what, I'd be willing to sell them at $200. That's a nice profit. So really on this actual transaction right here, you really get a $20 gain. Now you could have gotten a $25 gain had you sold them on the open market, right? So if I'm going to sell options, and if I hold 100 shares of Apple, if I don't want to sell options, I'm just going to sell at some future point. Let's say I wanted to sell at $205. I'd make $25 profit. But if I bought at 180 and I do the options instead, well, I'm only going to make a $20 profit when I sell. But I picked up $2, $4, $6, $8, $10 in premiums over the 5 months. So not only do I get my $20 profit, I also get $10 in premiums. So my actual gain, if I bought these shares for 180, is $30 profit. So had I just sold them on the open market, I would have made $205 or $25 profit. But by selling options, I'm going to get a $30 profit. And what this does, what this whole thing is called, is this is called selling a covered call. So what I really want to focus on is, yeah, you can go buy options, but over the long run, you're probably going to lose money. I really want to focus on how to make money with options. And the best way is by selling them. Being a seller of an option is how you make money. So this particular strategy here is called selling a covered call. All right. And the reason it's called a covered call is because the option is covered by the shares that you own. So if buyer over here wants to exercise this option and buy your shares, your option is covered by the shares that you own. So let's say I own 100 shares of Apple. I can then go sell one covered call. And the reason for that being that I have an option is worth 100 shares. So if the premium is $2, you got to multiply times 100. This is really $200. So in reality, I'm collecting 200, 200, 200, 200, 200. And yeah, I'm selling each share for 200, but it's really 100 shares. So it's really 20,000. You just got to multiply everything times 100. When you're looking at options, everything's multiplied by 100. Okay. So that's called a covered call. All right. This is everything for a call option. I'm going to explain put options, but Juan, were there any questions that any of the viewers had on call options before we go any further?
So the first thing I'd like to introduce Sean from We Are Investing. Sean is really, really big on selling calls. He has a lot of great videos on it. Thank you for joining us, Sean. He was here last week. Great YouTuber. Make sure you hit the like and give him a follow for my man Sean. We Are Investing.
Yeah, dude, I'm super excited to be here yet again. This is like the highlight of my Saturday. So thanks for having me.
No, it's
so it's like it's 12 o'clock. I grab a beer. I sit down and I learn and teach about stocks. That's the best way to do it.
Thing.
Man.
I got a iced coffee. I keep it iced coffee. So hey, Stock, I'm glad you said. I mean, like, so I didn't, we haven't seen his presentation. We're seeing it live reaction, just like Penny Slayer and Sean. We know this is live reaction, and I'm so glad that he leaned towards selling versus being a buyer in the option world. I mean, he hit it on the nail. The probability of making consistent money, consistent profit as a seller is way higher than being a buyer on the option. I mean, that is just maximizing the opportunity to make profit, not only selling calls, but selling puts, right? If you want to get into a stock at a low price, selling put is a great strategy. So thank you for that. If you guys have any questions so far on this for Stock Curry, he's killing it. This is great information. This is the best way. Like he said, there's guys that'll show that 150% profit, but they won't show you the loss that got there. So I love it. It's a great explanation. And if you buy our course, $10,000 will teach you how to get rich in 10 minutes. No, I'm just kidding. We ain't got no courses. Just kidding. This is all free. So yeah, if there's any questions, if not, he's gonna go over to puts and we'll go ahead, Stacker. I love it. I'm being a student right now. Keep killing it, man. I appreciate it.
Absolutely. So when we get to puts, it's going to be very similar. We're just going to go in the opposite. So let me set up everything real fast, and we'll have our buyer of the put option here, and we'll give people time to ask questions while I set this up.
We got one question here. Can selling puts have a huge downside?
So I guess it can selling puts have a huge downside? Okay, we'll get there. We're gonna talk about puts right now. So we're gonna answer that question here in a minute.
What did you guys cover before I joined? I saw you guys were doing covered calls. Is that it?
He basically just defined what an option is. We went over what's the difference between an option and a future. He just explained how it's a derivative. And then he talked about the strategy of buying options versus selling options, and how selling options, having covered calls is way more profitable and higher probability of being profitable in the option world. Basically, you basically just what you saw at the end.
Yeah, so I would just say there's one additional strategy to selling covered calls, and that would be a poor man's covered call, where you can use you're going long a call option that's in the money further out in expiration, and use that as leverage to then sell calls against it. So it's called a poor man's covered call because essentially you need less capital up front. There's more risk to it. You're going to have more beta because you are buying a leap option, but because there's less capital up front, that return on investment on that covered call is going to be higher.
Can you tell us for the viewers what beta is?
Yeah, beta is essentially like the change in your, like how volatile your position is going to be. And a lot of people compare it to a benchmark. So if you have if the S&P is going to go down to 1%, you might have a stock that typically goes down 2% off of that kind of move. So there's just more volatility to that position.
Yeah. So and you can use also beta, right, to measure the volatility in an individual stock, right?
Yeah. So higher beta stocks are going to be way more volatile, and lower beta stocks are going to be more in line with the benchmark.
Great, great. I'm glad you love the format. Another question for anybody on the panel: stock when sell or Sean, Penny, when selling a covered call, how do you determine the strike price? How does premium and theta work?
I can touch on that. I can talk about my strategy. So with covered calls, a lot of the times what I'm doing is I'm more focused on my core position. So I don't really want to get into a position where I sell a covered call and it ends up in the money and I have to then sell 100 shares. So I'm looking for prices that I think I'm okay selling the stock at. And also I'm looking for resistance too. I want to sell above a resistance point just to increase my probability of that covered call expiring out of the money.
Got it. Hey, so going back back to the basics with this one, this is a good question. What is the difference between in the money and on the money? We've heard these terms. What's the, and you got this visual up, so can you just kind of show us, Stock Curry, with the visual, what in the money, buying an option in the money versus out of the money?
Yeah, sure. So we had just talked about call options. So on a call option, if the call option has a strike price of $200, anything below $200 is going to be out of the money. And the reason being that the buyer's not going to exercise this option because they can buy the shares on the open market for less than the strike price.
Got it.
So out of the money would be this, 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 and this. In the money would be like this $205 one. Anything above $200 is going to be in the money because that means that I can use the option to buy the shares for less than the current market price.
Good, good. Is there a trick to do a poor man covered call? My broker would never let me sell a call after buying the leap.
They're spread, so you have to be approved for level 3 options trading.
Yeah. Keep that in mind. Depending on who your broker is, you do have to fill out some forms. You do have to kind of like go through a process to do more advanced options. I have Lightspeed, for example, and Webull. And there was an application process to do more advanced options in buying calls.
Yeah, and just to explain the levels real fast. Generally, in your broker, if you're approved for level 1 option trading, it allows you to buy calls and buy puts, and that's it. If you're approved for level 2 options trading, it will allow you to sell covered calls. It will also allow you to sell cash secured puts, which we're going to go over here in a minute. And then level 3 options trading gets you all the other option strategies, including your vertical spreads, the poor man coverage call, which is a vertical spread, things like that are really good for making a lot of money if you literally wanted to trade options. What I'm mostly covering today is going to be your level 1, level 2 options trading. And then what our other guests are talking about is more like level 3 options trading. There is a 4th level 4 options trading, but that gets into the extreme high risk. That's when you, for example, would sell a call and you don't own the shares. It's called a naked call. But that is extremely high risk. Most brokers don't even allow it because there's just too much risk to the broker. In fact, Webull does not allow level 4 options trading. So like level 3 is the highest you can go on Webull.
Got it. Is there a desirable delta to use when selling covered calls or preferred strike? Anyone on the panel?
For selling a covered call, personally, I like to go 0.3 or less. That just gives you a better chance of that covered call not expiring in the money. Remember, the point of the covered call, if you're trying to sell covered calls, trying to pick a strike price, is you're trying to pick a strike price that will not exercise. Meaning you want to be able to hold your shares another month so you can sell another option next month. So your goal is always to get a strike price where it's not going to exercise, go high enough. The problem, though, is if you go too high, too far out of the money, then your premium is so low, it's almost not worth it. So everybody's different as far as the price that they want to choose. But generally speaking, you want to pick one where, one, you'd be happy to sell the shares at that price if it got to that price. 2, you can collect enough premium to actually make it worth it. And the other thing is you don't want it so close to the money where it's almost guaranteed to be exercised. You want to be able to hold on to your shares to be able to sell them again next month.
Yeah, I think Sean hit it right on the head whenever he was saying that he wants to set his strike price right above resistance level. I think that that's beautiful. I think that's exactly what people need to start looking for, is making sure that you're making your charts, have your resistance, have your support, buy on the support, and then sell it right above resistance. That's the key to this, I believe, for sure.
Absolutely, absolutely. And anybody that's interested and missed previous courses, we went over setting support, setting resistance. I also have a lot of videos. I'm sure Stock and Penny Slayer, you can also, and Sean, you can find stuff on support and resistance. Please check anyone out. Another question here. Yeah, I have level 3 on Robinhood. Do you need to buy, sell the calls at the same time?
If you're doing vertical spreads, yes, you need to do it at the same time. If well, let me explain. You don't need to. There is the option to say, sell one before the other. But if you're going to do that, let's say you wanted to sell the call before you bought one, essentially one leg would be a covered call, and then the buying of the call would just be a separate option. But if you don't have the shares already, then yeah, you're going to have to buy and sell at the same time. Same with the put. If you don't have the cash on hand, you'll have to buy and sell at the same time. The other thing I should say is, if you're going to do the advanced options trading, the verticals and other things like Sean's talking about, you have to have a margin account. Okay, you can't do the advanced trading on a cash account. So just heads up on that.
I think I started a snowball effect here with this level 3 stuff. I just want to say this, like, if you don't know how to buy or sell calls or puts, learn that before you start dealing with spreads, poor man's covered calls.
Yeah.
Take your time, move up the ladder, as I would say.
But I mean, people are asking great questions, actually. These are not really beginner questions, some of these questions. So it's really good, really impressive. Anybody know how to close vertical spreads? I'm sorry, Sean, go ahead. What were you going to say?
Yeah, so we talked about delta. So one little trick is delta starts with D. D corresponds to dollar. Delta just corresponds to if the stock was to increase by $1 and your delta is 0.3, then your option premium is going to increase by 30 cents. So that's an easy way to remember what delta is. And with theta, it's T. So theta, T represents time. Theta is time decay.
Got it. Love it. Love it. That's like me with my colors for support and resistance.
I stole that from you. I've been using that.
Bro, it's my special colors, man. I feel like when I was explaining it, I felt like I was a special case, man. I was just like, this guy is red for a month. And go ahead, Stock. I'm sorry.
No problem. So if there's no more questions, we'll get into the put option side of the
how to close a vertical spread is where I interrupted.
Oh, go ahead. How to close a vertical spread?
So you just, for a spread, it depends on your broker. A lot of times you can just click to close a vertical spread. There will be an option to do it. The other way is you're going to have to buy back the option that you sold and sell the option that you bought in the spread. But most of the brokers, all the ones that I'm familiar with, you can just close the vertical spread, and they'll do all of that in one. They'll try to get both of those orders filled at the same time.
Got it. And then one more question before we go to Stock. Do you collect more premium based on the shares offered?
Yeah. So each option contract, 99% of the time, is going to be worth 100 shares. So let's say you own 200 shares, you could sell 2 option contracts. If you own 500 shares, you can sell 5 option contracts. So you can sell as many as you want. It's just one contract per 100 shares that you own.
There you go. Thank you, Mr. Curry.
Okay, let's get into put options. So as we said before, a put option gives somebody the option to sell shares at a particular price. And the seller would then have to buy them at whatever price that was. So let's do this. Let's say the buyer is going to buy a put option, okay? And they're going to buy a put option on Apple, and they're going to buy a $200 put option. Now, 1 month later, that option goes to expiration, and the market price on Apple at that time is $205. Now, as a buyer of this particular put option, let's say I owned 100 shares of Apple as a buyer. Do I want to sell my shares for $200 when I can go sell them on the open market for $205? Well, no, I'd much rather sell them on the open market for $205. So because of that, my $200 put is going to expire out of the money. It's going to expire worthless. And so I'm not going to sell this guy my Apple shares for $200 when I can go sell them on the open market for $205. So month one, I lose my $2 in premium. All right, month two. And by the way, you don't have to own shares to actually do this. I'm just explaining like how this works. So month two, would I sell Apple shares at $200 if they're trading at 202? Well, no. So this option expires out of the money. It expires worthless. Month three, Apple closes at $200.01. Still, I'm not going to sell this guy shares for $200 when I could sell them on the open market for $200.01. Month four, same thing, $203. So all four of these, the option expires out of the money or it expires worthless. All right, we get into month five. Let's talk about how this actually works. So month five, Apple closes at $195. Let's say I own 100 shares. I have the option of selling my Apple shares to this guy for $200. Now, I'm not going to go sell them on the open market for $195 when I can get $200 for them. So again, we'll do an example. Let's just say I don't own the shares, okay? Because a lot of people who buy options don't own the shares. They buy them or sell them at expiration, at the time they exercise. So I'm going to go on the open market and I'm going to go buy these shares for $195. And then I'm going to turn around and I'm going to sell these shares to the seller of this put option for $200. Now, the seller over here is going to have to buy the shares for $200 because that's what the strike price of the option contract is. And now the seller is also going to have to, let's just say he turns around and sells them immediately on the open market for $195. All right, going to our math again, we have the, we bought them for $195. We sold them for $200. We have a $5 profit. Okay, keep in mind we had to pay $2 for the option. So altogether, we invested $2. We made a $5 profit off of our $2 investment. That's a 150% profit. Again, what normally happens is these people will go on, YouTube or Reddit or Twitter or something, and they'll say, "Oh, look at me and all this money I made. I made 150% profit on this option. I'm a genius." Blah blah blah. And it's like, no, you're not a genius. So because why? If you remember from the last one, yeah, you made $5 on this transaction, but you lost 2, 4, 6, 8, 10. So your actual net loss, as we know, is a $5 loss if you go look over the last 5 months. Now, let's go see what happened to the seller. So on the seller, for this one particular actual execution, they lost $5 because they had to buy the shares for $200. They sold them on the open market for $195. They lost $5. But over the last 5 months, you collected $2, $4, $6, $8, $10 in premium. So your $10 in premium minus your $5 in loss, you actually end up with a $5 profit over the course of 5 months. And again, this is based upon very close to options that are going to be expiring in the money 20% of the time, out of the money 80% of the time. Now, all of that said, again, this is just covering exactly what we just went over on the call side, just the exact opposite. Now, how does this actually work? Well, in order to sell, let's say I don't own the shares right now, okay? Let's say I don't currently own the shares. So the question then becomes, well, and I'm sorry, I did this completely backwards. I just realized you collect $200 from the seller, you sell them for $195. And on this side, you have to pay $200 and then you're going to go sell them on the open market for $195. Fix that. Okay. So the question is, where do you get this $200 per share? Well, your broker is going to hold on to the $200 per share. Keep in mind, it's 100 shares per contract. So it's $20,000. So in order to sell a put option, you're going to have to, if it's a $200 put option, you need $200,000. And this is called a cash secured put. All right. It's called a cash secured put. because the $20,000 is going to be sent to your broker as security, cash security for the put option. So if the put option gets exercised, you have the money, the $200 per share times 100 or 20,000 to actually give to the buyer. So this is called a cash secured put. So over time, cash secured puts can help make you money. Now, you could just do a cash secured put by itself and use that to make money and then turn around and immediately sell the shares. But you could also actually combine these strategies. Now, before I tell you how you combine the strategies, I want to talk about why you might want to do a cash secured put. And the big benefit for doing cash secured puts is, let's say you wanted to buy a stock for less than it's currently trading at. So let's just say when this all started, let's say Apple was trading at $205. Okay. Let's just say Apple starts trading when the option is sold or purchased at $205. Now, I don't want to pay $205 for Apple. I want to pay $200 for Apple. So let's say I wanted to pay $200 for Apple. I would sell a cash secured put at $200. Even though Apple's currently trading at $205, I'm going to sell it for $200. So in this month, I'm just going to collect my $2 in premium. This month, I collect my $2, collect my $2, collect my $2. So now Apple's finally trading below 200. This is going to go ahead and exercise. So at the end of the day, I'm not going to, let's just say I'm not going to actually sell these on the open market. I just want to hold on to the actual shares. So how much do I actually end up paying for Apple in this? Well, I'm going to pay $200 per share, but I also collected $10 in premium over the last 5 months. And so the actual amount of money that I'm going to pay for my Apple shares is the $200, right? Minus the $10 in premium I collected. So the actual amount I pay per share is $190. But Apple's trading at $195. So by selling cash secured puts, remember, Apple was trading at $205. If I just gone on the open market and bought Apple for $205, cool. But when it gets down to $195, I've got a $10 loss. By selling cash secured puts at, say, $200 and being patient, I end up buying the shares net for $190, even though they're currently trading at $195. So originally they were $205. By being patient, I got them for $190. So this is a way, the big benefit for cash secured puts is being able to buy stock that you want to own at a lower price than what it's currently trading at. Now, one little caveat to this. Let's say I really wanted the shares and I wanted to make sure I was going to get these shares. And let's say Apple's still at $205. I really want the shares, but I still want them at a lower price. What I could do, and I'll just throw this down here, it's kind of separate. What I could do is I could sell maybe, call it a $250 put option, right? Let's say I sold a $250 put option. Now, why in the world would I be willing to pay $250 for my Apple shares if they're currently trading at $205? Well, the reason is this $250 put option has what's known as an intrinsic, I can't spell. You guys know what I mean. Intrinsic, something like that, value of $45. So what that means is if I'm willing to pay $250 and it's currently trading at $205, there's a $45 difference. So this has an intrinsic value of $45. Now, what that means is if I sell a $250 put, I'm going to get at least $45 for it. That's the intrinsic value. But in addition to that, you also have additional values, the big one being theta or time, right? There's a time value to this option. So maybe the time value or the theta value is worth another, call it $5, right? So if I sell this $250 put option when Apple's currently trading at $205, I'm going to get 45 plus 5. I'm going to get $50. Now I'll have to pay $250, but watch how this all works. Okay. So I'm going to end up paying $200 for the shares, but I collected $50 in premium on the contract, 45 plus 5, $50 in premium. So I'm sorry, I have to pay $250 for the shares, but I collected $50 in premium net, I am paying $200 per share. Even though Apple's currently trading at 205, I only pay 200. So if you really, really, really want shares, but you still want them at a discount and you want to guarantee this is going to actually exercise, you can buy a deep in the money option, and you can collect the premium. You'll actually collect the time value as well as a few other things. And so you will pay a lower price than the current trading price by buying a deep in the money option. Okay. Now, all of that said, I want to talk about one more thing real fast, and that's called a wheel strategy. All a wheel strategy is it's combining the selling of put options with the selling of call options. So in a wheel strategy, the way this would work is you would sell the option, sell the option, sell the put, sell the put, sell the put, sell the put. Now, we get down here and, okay, this put is finally exercised. I now own Apple at $190 per share. Now I've got the shares. The next thing I'm going to do is I'm going to go over to my covered calls. And again, let's say I now own the shares for $190. Okay. Well, now what I'm going to do is I'm going to start selling covered calls on it. Okay. And as I start selling covered calls, now I'm going to collect $2, $2, $2, $2, $2. Now Apple goes up to say, let's say it closes at 205, right? Well, now what happened altogether? So Apple closes at 205. On the put side, it started at, oh, that's the call. On the put side, it started at 205. So check this out. Apple's at $205. I sell put options. I end up getting Apple for a net of 190. Okay. We go 10 months down the road, 5 months on the puts, 5 months on the calls. Apple's now at $205 again. Okay. If I had just bought the shares and sold them, I would have bought them for 205, sold them for 10 months later for 205. I'd be net zero. But by selling those put options, and now we're going to turn around. Now that we own them, we're going to sell covered calls. We sell covered calls. We now sell it for $200 because that's the option we chose. But we only paid $190 because of our put options. Altogether, we end up with a $20 profit, even though the price of Apple hasn't moved 1 penny. So this is called a wheel strategy, where you use the selling of cash secured puts to buy a stock. And then once you own it, you sell covered calls to make even more money. And I will tell you that people who use the wheel strategy, the average profit. Now, the average profit in the stock market is about 8% per year. The average profit for somebody that uses a wheel strategy is about 30% per year. So you can change your 8% annual gain into a 30% annual gain by using the wheel strategy. It's very safe. You only need level 2 options to do it. And it's a really simple way to make significantly more money than just buying and selling shares. So that's going to wrap it up for my, sort of intro to options course and explaining level 1, level 2 options.
Hey, some major gems were dropped today. You can just study options and in general have an understanding in options, but Stock Curry went above and beyond and not only explained the basics of options, but he gave you something that was practical. So what to do? Don't just be like one of those YouTubers that just buys options, buys calls, buys puts, and shows his profits, but doesn't show his losses. Maybe overall he's not profitable. But he gave you a practical way that is not a Lamborghini. You're not going to get rich overnight, but you're going to have consistent profits. The name of the game is consistency. Like, people overlook consistency. That's why people they crap on index funds. They don't like anything that's just slow and boring and it's not pretty. Consistency is the game. Like, they found that the most profitable investors are the ones that don't look at their portfolios, right? They just hold it and just pick some good stock, pick a couple good indices, and hold it for the next 10, 20, 30 years. So Stock Curry, I love it. I love it. We need to learn more about wheel strategy. We need to learn more about selling calls, selling puts, so that way you can get that constant profit. That's what the name of the game is, consistency. Let's see if there's any questions before Tom shows up. Just to let you know, Tom is usually pretty late, even for his own live streams. So hopefully, hey Greg, if you send him a message, hopefully he can show up in the next 5 minutes. Let's see if You think a stock is going to decrease in value, and you have no interest in owning the stock, just want to make money on it while it's going down. What is the best strategy?
So I would say the best strategy in that case is going to be a vertical option. And I can let Sean talk about vertical options. Sounds like he's been on the channel before to talk about them. But a vertical option is probably going to be your best strategy, and what would be known as a credit bear call spread is the option that I would use for that.
Yeah,
All right.
you could play it both ways. Like if you think the stock's going to go down, then you can sell a call credit spread. So essentially, if the stock doesn't move up, you'll be able to collect all those premiums. Your risk to reward on selling a call credit spread is going to be a little bit less. You're going to have a little bit more risk just because if the stock does go up, you are going to have to buy that back at a much higher price. The other way you can do it is just like buying puts, but you can do a put debit spread. Essentially, you're buying one put and then selling another put against it. So you're decreasing the amount of money that you have to put up front to get into the position. Because honestly, like the max amount of money that you can make on a put is if a stock goes to zero, and that situation is very unlikely. So you can pick another put option that's at a price where you think the stock will hit a floor to help offset your cost to enter into the position and lower your break even.
Excellent. Excellent. Hey, this is probably one of the most common questions that I personally get. And just like people don't know how to pick a time frame. Like, what do you pick? Do you pick 2 weeks out, 1 month, 2 days? So what do you guys, what are your inputs on that?
I'd say for me personally, this is a personal choice for everybody. If I'm doing a vertical spread, or especially like a calendar spread, anytime I do a level 3 options, I like to go a lot shorter dated. I like to get down to around like a week or maybe 2 weeks, because if I'm going to sell an option, keep in mind that theta, that time decay that Sean was talking about, it goes down the most in the last month and especially the most in the last week. And so if I'm going to sell an option, I make money as the value of that option goes down. And so as theta starts increasing, that's going to increase the time decay. It is going to cause the value of that option to decrease faster and faster the closer it gets to expiration. So if I'm going to sell an option, I want to sell that as close to expiration as possible so I can make the most amount of money from theta. And if I'm going to, let's say I want to buy it, right? Then I'm going to go a lot longer dated. So if I'm selling, I'm just trying to get premium from the sale of the option. I want to go shorter dated. If I'm buying the option because I actually want to own the shares, then I want to go longer dated. So cash secured puts, I typically go a few months out. Sometimes I'll do just a straight call option, but I'll do a leap where it's more than a year out. That way I get the long-term capital gains on it. But if I'm selling options, I like to go a lot shorter, 1 to 2 weeks.
Excellent. Excellent. Tom just sent me a message. He's a few minutes away. So you pick the time frame based on your strategy, right? So you're saying, let's say do you sell puts like to get into a position that you want to get into? Is that strategy also?
Yeah, absolutely. That's what we had just covered with selling puts, cash secured put. When you want to get into a position, you want to get a lower price on it. But again, it's all going to depend upon your strategy, right? Different strategies have different things. If you're looking for a breakout and you don't know when that breakout's going to occur, even if you're selling an option, let's say, a vertical spread or something, you might want to go a little bit longer dated to give that option time to actually break out. So it really depends upon the strategy as far as your time horizon.
Excellent.
Yeah, and not every security is going to offer weekly options. So sometimes you're only going to be able to sell monthly. And then just one other thing that I would say to consider when you're selling calls or selling puts, just look out for earnings, right? You don't necessarily, it all depends on how you're trading the stock, but earnings are just another level of risk and there could be a big move. So just know when earnings are coming and maybe not sell a call option or a put option that's going to expire after earnings.
Absolutely.
Yeah, that's great. I mean, one of the things that I like to do too, especially, I mean, catalysts can be the same way, or news. So, I subscribe to a news feed, and then I can separate those like positions that I'm in to make sure that I'm first to know any news that comes through. So, subscribing to some type of platform that will give you that news first is always very helpful too.
Yeah,
Yeah.
I agree. And speaking on the earnings dates real fast, I think this is really important to understand. One thing we haven't talked about yet, we talked about theta, the time decay, we talked about delta. We haven't talked about the volatility or vega. So when it comes to volatility, that's another thing that's going to be priced in. Now, you don't need to know like how vega is calculated, but generally your broker will show something called implied volatility, and it's going to be a percentage. Now, right before earnings, leading up to the day before earnings, the implied volatility is at the highest amount, okay? Because people expect some big move post earnings. Now, a lot of people make the mistake of trying to buy a call or a put based upon how they think earnings is going to go. And what generally happens is because the implied volatility is so high, the stock has to make a major move to the upside or downside in order for a call or put to actually get into the money. So generally speaking, if you're going to play earnings, the best way to play earnings is to sell options. You could either sell like an iron condor or something, and to sell the options in order to make money, because the implied volatility, the expectation that the stock is going to make a major move to the upside or downside will decrease significantly once earnings come out, which means the value of that option will decrease significantly once earnings come out. And generally speaking, after earnings, the vast majority of options are out of the money because they lost so much money to that implied volatility going down significantly. So again, as the value of an option goes down, the seller of that option is the one who's making money. So going into earnings, I love to sell options because it's almost easy money when you start selling options at earnings. Now, lately, not so much because you have mega cap stocks dropping 30% overnight.
Yeah.
But, in a normal market, it works.
Yeah, that's for true. Yeah, selling options is best when you have high implied volatility because premiums are going to be higher and you're going to get more money for selling those options. When you buy options, you don't want high implied volatility. And like Stock Curry was saying, after earnings, you could buy a call option and the stock could move in a decent amount in one direction, but you're down on your position because you just got IV crushed. That's happened to me a couple of times. So you don't want to be buying calls or buying puts leading into earnings. If you want to trade that way, it's better to do a spread so that you don't get that IV crush.
And Sean, you want to explain what an IV crush is?
Yeah, essentially. So implied volatility. So if you're buying a call option, let's say it's Apple at $200 and Apple's trading at $195, there's an implied move to it. So people are willing to pay more for that call option. Let's say they're paying $1 for it. After that move, after earnings and the move already happened, well, then people are willing to pay less for that option. So instead of paying $1, they would maybe pay 50 cents. So you just lost money off of that option.
Excellent. So we have another question. One thing I know when it comes to selling options is that people worry about the account size. What would be recommended account size to start these strategies and to accommodate risk?
So when I teach on risk, I always use a 10%. So I tell people 10% of your total portfolio for options trading. And then within that 10%, I like to have each option worth about 10% of that amount. So that's the figure I use. This really depends upon your own personal risk. Something that a financial advisor or something can help you determine. But personally, 10%. So if I have a $10,000 portfolio, I may use 1,000 of it to trade options. And of that 1,000, each option I want to keep to a max loss of around $100.
Excellent.
I've seen so many people break that rule and they start going 50, 60, 70% of their accounted options and they blow up their account.
Yeah, and some of them use leverage on top of that, right?
Let's not even go there.
Yeah. I always talk about, and we'll talk about this in psychology, especially in the beginning, be reasonable, minimize your risk. There's going to be a learning curve. know your psychology, right? Like for me, when I used to day trade, whenever I had a big gain, a big day, let's say I made 1,000, 2,000, 3,000 day trading in one day, I
Went to the
always
Gucci
follow it
store?
up. I always follow it up by the next day by a loss. Because I went in there with the mentality that, oh, I made 3,000 yesterday, so I have a $3,000 credit, so I become irresponsible. And so just know your risk, minimize your risk. And these guys are definitely teaching you trades that give you higher probability of success in options.
You got a question on here for the stock splits if they have impacts on options.
There we go.
Yeah. So yeah, it can have a huge well, I wouldn't say huge, but it can change the game for a lot of us. So like Amazon right now, what's Amazon trading at? High 2000s?
Yeah, and I guess it depends too, like what stock it is, right? Like a stock, like for example, Tesla, when they announced their split, Tesla's a very volatile stock. So if a stock is very volatile, if it has a catalyst like this, then it's going to trade more often. And that's where we talk about in other videos, we talk about look at the history of a stock, look what it does. If it's a stock that usually moves, then you can expect a big move if they get a catalyst. So a boring stock, maybe like Bank of America, they probably, even if they got a catalyst, I mean, the float is so high that more than likely, even with the catalyst, it's not going to move. So if there was a split on a stock like that, it's going to be different than a stock like Amazon, a stock like Tesla that are already very volatile. So just know the history of the stock.
For sure. Yeah, I just uploaded a video talking about stock splits because of the Amazon's news. But the biggest thing is Amazon's trading, let's say at 2,800. I don't know the exact share price right now. But to trade options, you're looking at 2,800 times 100 because each option is for 100 shares. So when they do that split, the premiums get cut. Not that you're going to be losing out on money or anything. It's just it can allow someone like myself to start trading options in that stock.
Right. And the other thing is when you look at the options in your broker, you'll see the option date might say something like MAR 18100. And what that means is expiration of March 18th for 100 shares. Well, when the split actually occurs, Apple's a 20-for-1 split. It's not going to be 100 shares anymore. That option might show something like, times 20, 100 times 20, like 2,000 shares, right? Or reverse splits. It could show like 5 shares or 10 shares. So that's when I say like 99% of the time your option contracts are 100 shares. Well, in the event that the stock goes through a split, that option contract is worth more shares. In the event it goes through a reverse split, the option contract is worth less shares. And then the premium changes to, or the value will change to actually match that. And some cases, depending upon how the corporate action is actually processed, in some cases, rather than making the option contract worth more shares, what will actually happen is they'll just give you additional option contracts. So in Apple, you might have sold, or bought 1 contract, and now you've got 20 contracts. Excellent. So it just depends upon how the corporate action split. But that's the one and only case in which an option contract would not be 100 shares, is if there was a corporate action that involved a stock split or reverse split.
Excellent. And we just got TOMNASH in. I think this
temporarily. It looks like he walked away.
I'll be back. Say I have March 2023. I don't know. Do you guys know? I don't know. What
either Amazon. He's talking about Amazon, probably.
Oh, okay.
Yeah.
All right. So, hey, Tom. Hey, thanks for joining us. We got TOMNASH here. I'm sure everybody here knows Tom. He is a legend, OG in the game. He's he has a history of becoming a financial analyst, worked in New York, big firm, and he's an excellent YouTuber, great guy overall, helps out tiny channels like myself, super humble, has a great YouTube channel, and also one of my favorite shows. It's like the ESPN of really investing and news. It's called Money Talks with Justin O. They also do Unpopular Opinion podcast. Just an overall great information. Thank you, Tom, for joining. Sorry.
Continue.
Keep going. As a friend, man, I'm sorry. I asked you this before, if you can join, but you weren't doing like you didn't have Money Talks yet and this and that. So as a friend, I mean, like I feel
I'm
bad.
happy to be here.
Bro, you're like doing like eight videos a day. You're becoming like Meet Kevin, man, like on YouTube, bro.
God no.
Oh.
No, I'm saying like
He's
I'm
going to
saying,
sell all his stocks too.
so hey Tom, just to introduce
X-nay on the Kevin mit A.
yeah, okay. Yeah, for real. So, Chris said, "Real humble for real." Tom Nash, I've interacted with Tom Nash. He's like a mentor to me, man. He's helped me out a lot. He is extremely humble. Let me introduce you to a few guys here. We got Stock
I know
Carry.
Sean.
You know Sean from We're Investing. Yeah, Sean has a great
No,
channel.
I know him personally also. We
We had discussions before.
Okay, and we got Penny Slayer. Penny Slayer has a great Discord, extremely cheap price, but he offers so much. I mean, you can go on his Discord and get like a library of videos, a library of books for free. Just really, really worth it. And we also have Stock Curry. Stock Curry worked in the investment firm. He worked for banking, has over 20 years experience trading, investing. Really, really great. I feel like you and Stock Curry have like a lot in common. He gets into the macro and he talks about the war and things that affect stocks outside of just the direct, volatility. So I wanted to introduce you guys. Hey, thanks again, Tom. Today we're going to be talking about fundamental analysis and just kind of like an intro to fundamental analysis. Just to give you feedback, Tom, what we've been doing here, we put together really all our experience of trading and investing, swing trading, all that stuff, and put it together in a course form so that you don't have to pay $5,000 to some guy that's showing you his Lamborghini and showing you how to day trade and make $1 million a week. We're offering all this stuff for free. We've done intro to trading, intro to swing trading, intro to options. We're also going to do metaverse and NFTs soon. And Stock Curry broke down today making money with options and the best way to sell and be high probability when you're trading options. So today we wanted to do an intro to fundamental analysis and how we can apply it and kind of things that we can use to find a stock to see if it's undervalued, what the fundamental analysis is. And can you break down what exactly is fundamental analysis in Wall Street, or how do they look at fundamental analysis?
I don't know how to look at it at Wall Street because the Wall Street is a bunch of salesmen. But I guess actual investors, the way they look at it is it's basically the opposite mirror image of looking at technicals. Like in technicals, you don't care about the company at all, right? You don't give a shit about what they do, the TAM, nothing. You just look at the chart. Fundamental analysis basically is kind of the opposite of that. It's basically, okay, let's look under the hood. So what's the business here? What are the potential growth opportunities? Where is the thesis breaking events that might come in the future? What's the cash flow looking at? What's the balance sheet looks like? What's the P&L looks like? What's the growth looking like? What's the margins? What's the EBITDA? What's the OM? Let's look at the gross margin. Let's look at the management, if they're bozos or they're superstars. It's basically, imagine you're buying a business, not a stock, and trying to figure out, okay, do I really want this business and what price would I pay for this business? That's
Yeah,
essentially.
Instead of looking at charts, you're looking at 10Qs and 10Ks and other SEC filings.
Yeah, everything basically that's online, publicly available, that within, legal. Obviously, you can do illegal stuff as well. And some stuff in the gray area, which I would not recommend doing, but everything that's publicly available would be a good way to do it. You can talk with people who worked for the company in the past, or people who work with as a client or as a supplier. Try to talk to people around the company. That's legal, perfectly legal to do, to get like an honest opinion of what's going on. I'll give you an example. I was when everything was hyping up in the beginning, there was a Cathy Wood stock. I'm not going to say the name of the company, but it was in 3D printing, and everybody was gaga about the company, and I was really excited about it. And I was like, do I really want to? I couldn't make up my mind, and I called up a friend who designs PCBs. Like in every R&D team, you have a guy who designs PCBs. So basically, if you need a printed circuit board to do something, you tell him what's the specifications, what the functions you need, and they'll design it for you, right? So that's kind of his bread and butter, designing these. And he would handle procurement from China and the designs and everything. So I was like, okay, so what do you think about this company? And I said, listen, I know a bunch of guys who work there, and they're super nice guys, nice management. The product is total garbage. I mean, look, it looks great, but the moment you try to put it into work, it's a it's a 3D print. It's not as good as the real thing. So plus the time is really problematic. It's like unless you're in R&D and you did something super fast, like in mass production, you don't mind a 5-day lead time, which you'll get in China anyway. So what's the market? It's like I don't understand this company. And he said that, and that was basically more valuable than anything I could have found online in 3 days of research and 5 minutes of conversation with somebody who understands the true meaning of the business, not just some idiot reading of a Kathy Wood YouTube post or whatever the fuck that is.
Yeah. So with ratios, right? I know you learned a lot from the three guys and learning how to apply PE ratio. I know your favorite three guys.
No, you're talking about multiples. Ratios is something different.
Multiples. I'm
Ratios
sorry.
is probably like, but you're talking about cash to debt, stuff like that. Like,
Yeah.
That's ratios. We're talking multiples.
So what
Yeah.
are your favorite multiples to use when trying to evaluate if a stock is undervalued? I know
Well,
I know PE is at the top of your list though.
Yeah. Look.
Just kidding. Just
So the one thing I want to explain here, and that's something I didn't like. I did a quick video, I put it out there for a day. I wanted them to see it, and then I took it down. I'm sure they saw it. It was kind of basically a fuck you. I don't want to give them more clout. I didn't put their name in the title. I didn't mention their name in the video. I want them to have zero clout from this. I just wanted them to see the video. Now look, seriously, because we're here to teach, right? So
Yes.
the most important thing to understand about multiples, and guys, if you don't agree with me, please let me know. I think is the fact that it's not about the multiple, it's about the comparables. The comparables that you use to examine the multiples is much more important than which multiple you choose.
within
I'd
the
much
sector,
rather
right?
not even within the sector, even specifically in is a comparable. Like,
Okay.
I'd rather you use a PE and use it against a company that actually fits than use a price to sales against a company that makes no sense to compare it to. So that's the most important part. So, like, people would do this mistake sometimes. And it goes both ways. You can look at Ford has a 0.5 price to sales or whatever, I don't know, or 0.7, and Tesla has whatever it is, I don't even know, like
15.
600,000. Yeah, I don't know. and like, yeah, sure, but like I can buy a potato for $5, or I can buy a spaceship for $5 billion. The potato is cheaper, but one is a potato, the other one is a spaceship. It doesn't make sense to compare them, right? So, not that I'm saying that Ford is a potato. Well, Ford is a potato, but
Oh,
look,
come on, man. Come on.
But-
Now
No,
we're
I'm just
picking
kidding.
stocks on the channel.
bro, people hating on Ford because of the EV stuff. But mind you that, I'm not an auto guy, but what's the best category for vehicles in the United States? It's trucks.
Yeah.
Trucks.
It's the
I got
biggest.
a F-150.
They own it.
Yeah.
They own the trucks category. The only thing, ironically, that can kill Ford is Putin. If he sends us to another energy crisis, trucks are gonna suffer. I'm sure Ford is not liking what's going on right now, bro.
No, nobody is. Not even Tesla with the
Yep.
what's it called? Like platinum and aluminum and all that other stuff.
Nickel and all that.
Nickel.
Yeah,
Yeah.
nickel. And palladium is Russia is 40% of the global market, and palladium's used in catalytic converters.
Yep.
Any of your internal combustion engines, they need catalytic converters, and there's just not enough electric vehicles out there, so people are still going to buy these because they need a new vehicle. And
The guy who makes those, his name is Vladimir Potanin, not to be confused with Putin. You laugh, but Vladimir Potanin is the richest man on record in Russia, which means is the second richest in real numbers. We know who's the richest one. So the second officially the richest man in Russia is Vladimir Potanin. He owns the company that mines palladium in Russia. The one, and actually, what's really curious about what just happened, you guys don't follow Russian newspapers and media, I'm sure, except you, Juan, of course. But so something really interesting happened in the last 48 hours. It's very indicative. So how in Russia, nobody goes against Putin.
Of course.
Like, it's really life-threatening. If you have a clip, you can go back and look. He was talking to his head of intelligence, and basically it was kind of a theater. He was asking every single one of his heads of army and military branches, like, do you think we should invade Lugansk and Donetsk. And basically they were saying, yes, yes, of course we should. And he got to this guy and it was televised. And the guy was like, I think maybe we should examine a little bit more, possibly negotiating. And the way he looked at him and the way he talked to him and the way the guy apologized for not agreeing with him, it was like you saw a grown-ass man, a killer. Like, this is not some pushover. This is a killer, bro. You can see in his eyes how he's terrified for his life, for basically pushing back a little bit, bro. So you don't really go against Putin, Russia. So Vladimir Putin 2 days ago came out and said, I think we're doing a mistake by basically retaliating to these sanctions. Basically said that, well, he said basically we're going to nationalize everything that these foreign companies are going to leave behind. We're going to take away their trademarks, etc., etc., etc. That means nobody. Yes, that's the clip. I wish you could understand Russian, bro, but like this man was terrified for his life. I kid you not. As a guy who speaks Russian, that sends chills down my spine, bro. The dude was literally afraid for his life.
I saw this
And
video, Tom. I saw
this video is terrifying if you can understand Russian, bro. It's fucking scary. So Vladimir Putin, who's like obviously, he has look. I mean, you can't mistake just the way he looks at him, bro. He's like, I'm gonna have your balls for breakfast, motherfuckers.
He's like, are you expecting us to negotiate? Because that's not gonna happen.
So Vladimir Putin in 2 days, yeah, that's true. So 2 days ago he came out and said, hey, we can't nationalize all this stuff because what's going to happen is we're going to make this whole thing irreversible. Because right now it's all about business. If we fix this somehow, all the foreign companies, they'll be back and we'll be back to operations. But if we nationalize shit, that means it's GG for everybody for the next 30, 40 years. It's like cheating in a relationship. You can't come back from that. I mean, the trust is broken forever. Nobody's going to put capex in Russia if we nationalize shit. And he said this in the newspapers. He could have called Putin. He has a direct line to Putin, I would assume, but he chose to do it publicly. So it's a paradigm shift in Russia. For a guy like that to come out and do it, it's a chink in the armor. He was more scared about the economic implications than getting killed by Putin. Obviously, he retracted the statement and he pulled back and everything, but that was expected. And I think he knew he'd have to do it, but he did put it out there. So if you all want kind of evidence that the sanctions are kind of, I don't know if they're working or not, but they are causing a little bit of a paradigm shift. You got it just in the last 2 days.
What would you say though when you apply sanctions? Because historically they have not had great results, right? What is usually the time frame to kind of see the full impact of sanctions, right? Like if I apply sanctions now, when does it usually impact the country?
Depends on which country. It will never work in Russia. He doesn't give a shit. He doesn't get elected. He doesn't care, and people there are used to suffer because of governments. I mean, they're not Russian people will not overthrow a government because of bad economy.
So I can speak on this a little bit just on my family history. So my mother fled Cuba when she was like 8 years old, and there's an embargo on Cuba, so the U.S. couldn't trade directly with Cuba. And you saw in the last year, if it took that long for people to finally start protesting and going out to the streets, what did the government do? They locked a bunch of people, they took away internet, and you haven't heard anything since. But the Castro regime still controls Cuba. After all those sanctions, nothing has happened.
Yeah, sanctions is it's a very problematic tool. Don't forget also sanctions put us in risk.
Us like the United States here, right?
Yeah, us and the EU. EU is even in a worse problem than us. But it also potentially, I don't think we'll lose, but I made a video about this because there's a lot of, look, this is the perfect opportunities for all these fucking scammers to crawl out like little cockroaches, to crawl out of their holes and start spewing this nonsense again. So for the past 20 years, you had all the gold pumpers and the idiots and all the end of the US dollar, end of the US economy, or whatever. Fuck you, idiot. Now you have them joining forces with all the there's the people who are, I call them Russia apologists or Putin apologists. So they're like, oh yeah, so they try to rationalize why Russia is right in this story. A lot of them are Americans, by the way, which I find really peculiar. But anyways, they all come out now and they say, "Oh, look, this is like we've been predicted." They're like Michael Burry, 16 predictions out of 0. They're like, "Oh, we've been predicting that this is the end of the dollar. Now you're going to see the end of the dollar because you just basically chased away the world's biggest superstore out of the dollar, right?"
Yeah, but
And
OPEC will never stop buying the oil on dollar.
no, petrodollars is a cheat code. I said this, but even without petrodollars is a cheat code, and I'll talk about it in a second if you guys want. But
Yeah.
it's not even about petrodollars. Look, here's the thing. So most people don't realize this, but Russia has been off the dollar for years. He's been bracing for this. Putin has de-dollarized his entire export system for the past 4 years. He used to get paid. So Russia exports like their whole economy is basically dig shit from the ground, sell it to other people. Zero sophistication, zero technology, it's just a fucking. It's so degenerate to live like this. But when you have so much shit in your ground, it almost disincentivizes you from developing a real industry or technology, right? So his entire economy is built around this. So export is a big deal in Russia. 40% of Russian budget is exports of commodities, metals, and energy. So up until 2017, Russia used to get paid 95% in US dollars because that's the world's reserve currency. In 2017, where I think he started planning this, he completely started de-dollarizing his exports. You know how much he gets dollars right now? Before the invasion, he went down to single digits in dollars. It's all in euros, yens, yuans, you name it, but it's not dollars. So he's over 90% not in dollars anyways. So people are like, oh, you just chased him off the dollar. Motherfucker, he was off the dollar for 4 years. He's been bracing for this. He didn't know that he's going to get cock-blocked by the EU. He thought he'll have euros, which he doesn't really right now as far as access to some foreign currency reserves. But chasing Russia off the dollar is a kind of a fake news tactic because he's already off the dollar. Now, as far as will it have a negative impact? Yes, because China and Russia, maybe India, there's a lot of countries who are looking for an alternative system. But a lot of it, there's a lot of American hate over in that part of the world. But ask yourself this question. Forget petrodollars, which is the cheat code. I'm not going to start explaining petrodollars here because it's going to be like boring as fuck. But even without petrodollars, let's say that no petrodollars, we're starting from scratch. No OPEC petrodollars, right? Every country, let's choose our own reserve currency. Okay. Find me a currency that's super liquid, stable, there's rule of law, evolved banking system, speed of transfer, and it's accepted everywhere. And there's no chance of nationalizations, putting billionaires in prison, raping tennis players, whatever they did there in China, I don't know, starting wars in Ukraine. I mean, we can go on and on and on. Find me another currency, allegedly. Find me another currency, right? That can fill that part. Even without petrodollars, like what other currency is there out there? What's the alternative? Yuan? Yeah, good luck with that, motherfucker. I mean, their whole economy, rickety ass economy over there in China is basically just a fucking paper dragon. China is posturing as if they're some sort of a fucking world-class superpower. The reality is they're facing a huge demographic crisis. Unlike the US, they can't artificially solve it by immigration because nobody wants to fucking go to China. If anything, people want to fucking leave. They're not energy independent. Their geographic borders are shit. All their neighbors hate them, so they have to be militarized as fuck. And the cost of living in China is going up. So China is basically posturing. And if they want to play this little like fucking we started our own our own club with Russia and India, go fucking right ahead, no problem.
Talking about China,
so all these doom and gloomers pushing gold and stuff is like fuck you.
Talking about China, there seems to be a misconception that if you can explain, people think that Russia is not able to sell energy anymore to Germany, but they're going to be able to turn around and sell it to China. How realistic is that? And if they are able to do that, how long would that actually take?
It's
So
like
I
one
don't want to
pipeline,
hog this.
right?
You guys want to talk about
No,
it?
yeah,
Go
there's
ahead.
like so they're still buying energy from Russia. Europe is still buying natural gas and oil from Russia, and I think so are we, unless that just changed.
Well, we only
No.
buy, I think,
Wait,
less than
wait. The U.S. doesn't buy
3%.
natural gas anywhere. U.S. is natural gas
No,
exporter.
Oil. We get
oil.
like less than 3%
And it's
oil from
only
Russia.
up here in the Northeast in like Boston area. There's a couple
I think
ships that come,
I don't know how long for. There's a ban on Russia oil
Yeah.
from
but
Biden. I
not
don't
for
know.
Europe. I think
I
Germany
don't
is
know.
40% relying on Russia.
Okay, look. So here's the thing. U.S. is a net exporter of natural gas, and we have our own Ukraine, which is Canada. So
Yeah.
this is like a better version of Ukraine.
We get
Yeah,
oil
so-
from Canada and Mexico, right?
Except we decline the Keystone XL
Keystone,
pipeline.
yeah, Keystone is a strategic mistake. Nobody talks about that, and it's a huge blunder by this administration. Keystone was the fucking mistake. They can fix it though. But look, U.S. is correlation -1 to what I just told you about China. Think about it. Friendly neighbors all around. No need for military on the borders at all. We literally don't need the border with Canada. I mean, that's really ridiculous. Canadians, they grow everything. They have natural resources. They're willing to trade with us at a reasonable price. It's like a better version of Ukraine up north, right? So they're our superstore, and we have natural gas. And don't forget, the U.S. grows everything like wheat, soybeans, corn. We can grow any fucking thing, no problem. So the U.S. is basically this superpower geographically. You can conquer it. Geographic borders, either water or friendly neighbors and whatnot. So here's the problem. So we'll never have shortages of anything, but we'll feel the pain because pricing is global, right? So I talked about it. Europeans, they're in a whole different fucking story, bro. They might actually not have this shit. That's a I had Sachin on my show and he said it's one thing when you pay expensive, the other thing is when you don't fucking have it. Like Lebanon, go see what's going on in Lebanon with natural gas. This is how governments fall, by the way, not food, energy. So as far as Sean is 100% right. There's been zero interruptions. There was a little, like Russia shut down a little bit the natural gas. They fucked around with it a little bit. They didn't send as much just to fuck with Europe, but like 6% or something like that, just to show them like they can. But Europe is buying 40% of their gas from Russia and about 25% of their oil from Russia. In certain countries, it's even higher. We all know, like Germany is like 60% import from Russia on gas. But ask yourself this question: okay, why didn't they sanction this, and why has Russia did not punish them for that? Because it's kind of the nuclear weapon of economic sanctions. If you're Europe and you stop buying this shit, which means commodities, energy, you starve and freeze. And if you're Russia and you stop selling it, then you basically die, because once the EU and US froze the assets of the CBR, which is the central bank of Russia, so the only source of income is these commodities and energy. So, and the only place they can really sell them at scale is EU, because selling to China requires infrastructure that takes 3 to 4 to 5 years to create, as pipelines, supply chains, customers. So potentially they can sell it to China, but it's going to take them as long as it's going to take to Europe to diversify out of natural. So it's kind of, it doesn't make sense for anybody to do this. But ask me who's more likely to basically say, well, fuck it, I'm just gonna suicide myself with you guys. I mean, I wouldn't test like pushing this theory, to the max. When you have like an electric appliance, you never want to turn it on 100%, especially if it's made in Russia. You don't know how kind of what kind of, especially it was made on Monday. You probably want to go like 70%. So I wouldn't test this theory, like pushing him to the brink. But so far, like it seems to be the reason why and that's why the US can't say it, because we really don't give a shit, to be honest. Like, fuck Russian oil. Who cares, bro? We don't need it.
Yeah. Doesn't
Do you think
impact us
Russia?
much.
Do you think that Europe is going to be successful in reducing their reliance on Russia by 80% by the end of the year?
No,
Wow.
zero. There's more chance I'm going to lose 50 pounds by the end of this year, bro.
You lost a lot.
Which
you
I
lost
know
a
is
lot
a
of weight.
0%, bro.
I thought you were gonna say there's more chance your grandpa's gonna stop drinking.
That is, bro. It's preposterous. They'll be lucky to do that in the next 5 years. If they start now, they push renewables. They need 5 years to potentially have a plausible chance of getting that target, bro. Maybe 5 years. They have no infrastructure, bro. They'll need to restart. Germans need to restart a nuclear industry which they killed. It's not like a fucking oven. You just don't turn it on. This thing takes years to, like, you need to get the human resources up and running, like engineers. You need testing, you need certifications. It's years and years of restarting this thing. It's like nuclear infrastructure is fucking. It's not that simple to just shut down and turn it on again. It doesn't work like that.
Hey, Tom, we got here this guy from New York. He says you curse more than him, and he's from New York.
I spent a few years in New York, actually.
What-
Well, you want my address, motherfucker? I'm not gonna give it to you. You're waiting for me to say where, bro.
Oh no, I thought you were gonna say something. I didn't want to interrupt you.
No.
What do you think about all these big companies leaving Russia? Someone said that the citizens aren't going to stand for this, that they're used to the comforts of these big companies and they don't want to go back. So I doubt the citizens are going to uprise because McDonald's left. But what do you think about these big companies leaving Russia?
I'd have a hard time believing that, the employees of these companies are going to, start an uproar, because I believe that I think there was maybe even be more now, but 121 publicly traded companies stopped doing business with Russia. And then, but not only that, they're still paying their employees like they're there, which I think is great, right? As a US based company, whenever they stop doing business with a whole country and still taking care of their employees, I believe that that's a really good sign. But it's also not going to put any pressure on the people of Russia to go, hey man, you need to stop what you're doing.
So this can also be a solution, I guess, if Tom can fart and help give some of the gas for the next year.
Get him hit the cushion. He's like 4'11". He can sit on the cushion so we can see him.
So how much further down do we got to go on the market off of this stuff? That's the golden question.
No.
Nasdaq's
Goldman
down
Sachs
over 20.
think they know. You saw the
Yeah.
Goldman Sachs guidance about the GDP? Like, they flip more than Kramer, bro. Goldman Sachs with their fucking notes. Who writes? Did you see it?
No.
Like 1.75. How? What? Hey, 2 weeks ago, this was 2%. Before that, it was like their macro stuff is like fucking weird. You read it, it's like, what changed in 30 days, motherfucker? I mean, it doesn't.
Citi came out last week and said buy the dip.
Yeah, Citi also put all their money in Russia, motherfucker. So, and I like Citi, bro. Look, Citi is the most undervalued bank out of the big banks right now, before Russia. Their numbers are phenomenal. I made a video about it.
I have partnerships with Jefferies, and Jefferies is also buying here at these levels.
I've been buying. I'm not fully in, but I've been buying. I don't know how much.
I made a video on Tip Ranks saying Citi's they're not. Look, they're the lagger in the group. If you compare it to Wells Fargo, to JP Morgan, to Bank of America, they're definitely the worst of them all. But it's not like Intel and Nvidia. It's not, but it's priced like it is. They're really half the price. But as far as the macro stuff, so here's the problem, right? So you're looking at this and you're saying, oh shit. So inflation is a 40-year high, 7.9%, right? Gas prices going through the roof. How the fuck does it not lead to a recession, right?
It's got it. Yeah, it's gonna. The Federal Reserve has nothing else in their toolbox but to raise rates to break the back of inflation. It doesn't. It's a supply thing, and this administration doesn't want to fix the energy crisis and chips. Those are the two main things that are driving inflation. The Federal Reserve cannot fix that. All they can do is raise rates to a point where it just causes a recession to tackle inflation. That's the only thing that they have, in my personal opinion. And when you take a look at the bond market and you look at the spread between the 2-year and the 10-year, we're almost inverted, and that is the
You're
first
flat
sign.
right now. You're flat. But yeah, I get it.
It's at 0.2, I think, 0.25, somewhere around there.
It's heading there. It's heading there.
Yeah, and if you look at the drop in the last 4 to 6 months, it's a big drop.
Yeah. It'll
So
invert within the next 2 to 3 weeks.
that it potentially, because
Historically,
and that's
that
crazy to
means
think.
100% success rate if you're trying to predict.
Well, yes,
recessions.
every recession was preceded by an inverted yield curve between the 10 and the 2.
Yep.
But not every time that it inverts, there is a recession, but it's a very large percentage of the time.
Also, this
Within
might take
12 to
6 or
18
7 months. Yeah, exactly. Yeah, it's not like I don't want people to think that this happens like immediately.
Yeah, for sure.
I'll tell you what doesn't. If you do you want a positive sign, so I'm with you here. But if you want like a positive sign, we've never had this strong employment market like we have right now in none of the other recessions. So
Yeah,
That's
I work for a publicly traded company, government defense, actually. And, we've been giving out 10 to 15% raises like it's Skittles. And it amazes me. And I'm like, okay, like this is great. I mean, I know that we're taking on inflation head on and giving raises to people like that. But I'm wondering, when does the money run out? Like when do you stop eating into your profits and becoming a profitable company and taking care of your employees in order to fight inflation? There's got to be a stopgap somewhere, right?
Yeah, you're talking about wage growth spiral. It doesn't stop unless the Fed steps in, and right now they're just not.
Yep.
But what's actually interesting on that topic is that I don't honestly know how strong the underlying job market really is, because for one stat, the real personal income is actually going down. So personal income's coming down, costs are rising, and that's putting it's putting a lot of stress on companies and their profits. So they can't just go out and give people more money in their wages. So I don't know what's going to happen. This stuff is impossible to predict, but to me, it doesn't seem like it's all good. Like there could be some downside here.
What do you think about Biden blaming the current CPI report to the war? I mean, how is that even possible? Like the CPI came out, isn't it?
No,
like,
did he say
right.
this? I didn't. I
Yeah.
never. I didn't.
Yeah,
hear
Yeah,
it.
he
it's
did.
for the prior. It's for the
Yeah.
prior month. Yeah.
Yeah,
He said the
I mean,
reason
like,
inflation
he
is
said
going
it?
up is
Really?
because of
yeah, that's why I want to
Yeah.
reaction. Like how he blamed the 7.9 to the war. I'm like, okay, how is that
Womp,
possible?
womp, womp. Yeah, that's goggly goo nonsense.
Well, he also did say at the same, he also said in another speech that the Iranian people in Ukraine are resilient.
That might be true, actually.
He called the Iranian people in Ukraine. He's like, man, these guys are resilient. Like, what's wrong with
Look,
this guy, man? It's embarrassing.
When you on TV for a long time, you say stupid shit. I've done this myself before. I have a whole video where I say instead of consumer price index, I call it the core price inflation. When you're on TV or YouTube every single day and you talk a lot, you're bound to say stupid shit, bro. It's inevitable, bro. So
I think when Biden's the opposite, though, he's bound to say something that makes sense sometimes.
Yeah.
look, I don't know. I'll tell you one thing though. People don't remember this right now because we went through so much cycles of more clusterfuckness than before, right? So it always seems like it can get any worse, and it's getting worse. But supply chains have started to slowly ease off before the war. There's been this slow kind of, when you're sick and you kind of just feel not as shitty as before. You don't still feel great, but you kind of feel okay. We started to slowly kind of unclog the system. So that makes me think if they can resolve things over there and basically find a solution that works for everybody's satisfaction and resume business, which at this every day seems like it's less and less plausible. This might actually, I don't know how long we have yet, but if it's done on time, that might kind of put us back on track.
Hopefully. That's the
But
goal.
the problem is nobody has an interest to do it. Think about it this way. Like, I don't. None of us understand like what are the root causes and how it exactly works and who makes the decisions. But if they figure out a way to stop it somehow, then our whole discussion about a recession, uh, like, goes from much more likely than not to happen than to a 50-50 kind of discussion.
And
Yeah.
even if we do get a recession, it's always possible it could just be a paper recession. Most people won't even feel it or know it.
We already popped a bubble on the stock market, so we didn't even have one. Some would say, well, it like I heard this opinion, or like, oh, look at the stock market, look what happened, and we didn't even have one rate hike. But like, it, it's the stock market has gotten really good at pricing in future expected development. So the stock market kind of already priced in the whole seven hikes already. So how low can it go more? I guess it can always go lower, but I mean, like at least in tech, we had like a what is 50-60% drop. I mean,
in most stocks.
yeah, at least in growth. I
Are
think it's
you
healthier, like right now, like at least for the next few months with the war and everything, and the supply chain shortages and inflation. I think in defensive positions is probably where you want to be at, if not in cash.
I saw this on Twitter, and it was from Wall Street Bets, and there was a tweet, and it said, like, so when stocks were falling, all this growth stocks off of the increase in oil, they're like, wow, I didn't know tech stocks relied so much on oil. It's like, why is gas, Brent crude, going 135, making Google sell off? Like, but I thought that was hilarious.
Like, you're not using value investment tools, Tom?
Hey, I don't want to get triggered today. I'm in a good mood.
Hey
But
Tom,
hey, this is actually a good question that it kind
Okay.
of goofs and gaffs. But I spoke about this very important question with Sachin, and he's an energy guy. I don't know if you know his channel. He has a
Yeah.
small YouTube channel, but his expertise is energy. He's been in the energy business for the past 18 years, and he focuses on the. Never mind. Anyways, so he knows energy, and I asked him, okay, so what's the top for the oil price? I mean, at which point we price in complete failure of supply from Russia and Ukraine? Like, what's the price? And he explained to me, he said, listen, there's no point where I can tell you, oh, 130, 140 prices in complete failure in supply chains, because the price of oil is completely elastic. It's unless there's an outside intervention, uh, potentially it can go. There's no bottom or ceiling to this. That's why he said we had negative pricing at some point in the pandemic, because the price is literally like in extreme cases it can really fly up. And what he said to me is our best hope right now is to somehow find a leverage to get OPEC to play ball, because that's where our, if you want to throw a Hail Mary, you want to throw it there. That because it doesn't seem like things are getting worked out with Russia, and if OPEC play ball, they can easily offset at least a big chunk of any interruptions we get from that part of the world. Um, look at how funny things have become, right? So we're fighting with Saudi because of their involvement in the assassination of that journalist. Iran we're fighting with because of nukes. Venezuela for who the fuck knows. And so we have all these fucking pockets of political. So we're like the neighbor who fought with all of his neighbors, and now he needs them to help. So now we need Iran, Venezuela, and the oil cartel to save us from the Russians. This is
Yeah.
literally becoming the worst, craziest year of my life, bro. I can't believe I just said this sentence.
Yeah, my earlier career, I used to work for an oil company, and back then they would say, "Listen, it makes no sense for us to drill for oil unless oil is above $80, and if it's anything below that, we're laying people off." And that was just the game, right? And so you had oil at that time, back in 2008, was doing this big spike in yield curve, right? And people were getting laid off on the dips and then getting hired on the rises. Like, it was insane. Like, I think I lost and got my job back 3 times before I go, this is enough, I'm done. But you know, I think that it makes sense for U.S. oil companies to really start looking at going and getting our own things here, and really start going after some of our own oil reserves and producing a lot more of that stuff. I took a position on EOG Resources, which was the company that I worked for at the time. But you know, I like EOG, and I know that they're going out there currently right now and out there drilling. I live here in Texas. My boy Juan here, he knows all about that. We've got a lot of things happening in here, and EOG Resources is they're starting to make pads again, so it's a good sign.
But how long would it take? Like, I don't understand nothing in energy or drilling or stuff like this. But now, obviously, the price is right. How long it takes, like, for the cycle to complete for them to be able to produce capacity?
So usually a well, you know, it depends on if they're directional drilling or not. But a well usually takes about 2 to 3 weeks to, you know, drill in, get the resources, and bring it out. It's pretty quick. So you would think over a quarter period, you could probably get a lot of oil into the industry fairly fast.
That's if you get the damn permit.
True. Very
Yeah,
true.
because right now, aren't the oil companies complaining that the Biden administration is making it difficult regulatory wise? And so the energy secretary came out, I think it was yesterday, the day before, saying, you know, we're going to be a lot more lax now because we have an emergency. And oil is basically saying, well, great, but we still need the White House to relax regulations here so we can get going.
Yeah, I mean, I agree with that too. I think that, you know, there is a lot of regulations when it comes to whenever we have a Democrat in office. And it's just one of those things that we have to, you know, mitigate is we've got to stop getting in our own way. and we can't stop doing that for some reason. But I'm always on the bright side of things, if you will, right? I always believe that there will always be a path to success, and we just need to get there for sure.
The worst things for growth is regulation and high taxes. And right now, we need GDP to outgrow inflation, but the problem is we have a government that's not going to reduce taxes, not going to reduce regulation. So we're screwed. I mean, it is what it is, bro. If you want to unsubscribe because I said it, go right ahead. But
Don't unsubscribe to
go
Juan's
look in
channel.
history.
Don't
Go look in
unsubscribe to
history. Look,
Juan.
No,
everybody talks about you know how everybody talks about Paul Volcker, right? How he saved
Yeah.
the U.S. So Paul Volcker could not have. Paul Volcker, for those of you who are not familiar, if you were born before 1964, so if you're
He
not
increased the interest
he acted
really
in
high, right?
The Fast and the Furious. He was a great actor, and also was a former Fed chair. He started with Jimmy Carter, and then why did Paul Volcker didn't make it when Jimmy Carter was president, and why it worked when Reagan was? Because Reagan played ball. So if you want to raise interest rates, well, first of all, now they don't have that option because the U.S. debt is now 100% more, 120% GDP. It can't be done now. But back in the day, they had the option to raise interest rates, and they did this along with people may hate, oh, Reagan this and Reagan that. Fuck you, I don't give a shit. Reagan played ball with Volcker. Volcker raised interest like crazy. Reagan deregulated everything and reduced taxes. So you create massive GDP growth that pays for the increase in rates. So that's how they got out of it. People forget 1980 was a fucking recession. It didn't was like a straight out the gate. Like it was a process they went through. But if you have a government that doesn't play ball, raising interest rates without incentives for the economy to outgrow GDP, it's like having sex with yourself. It's going nowhere, bro. If you're trying to get pregnant, I mean, not for fun. I mean, you're only going half the way. You know what I mean?
That's amazing.
I just demonetized Juan like 15 times,
Hey,
bro.
one thing. Hey, when Tom said unsubscribe, he meant from his channel. I only got 10. I only got 10
Make it clear.
subscribers, man. I only got. You're gonna make me lose 100% of my subscribers. I only got like 10 subscribers, man.
Anybody who unsubscribes to mine, subscribe to Juan.
Hey Tom, are you investing in any China stocks? I just did a reaction on. I don't know if you ever heard this guy named Strongman Personal Finance, bro. This
I
dude's
like him.
funny. He's
I like
so
him a lot.
funny, bro.
I love him.
Bro, this guy makes me laugh. I don't know if you're able to hear this audio.
Wait, what is
Are you
this?
guys able to hear it?
No.
No, he's a funny dude. I like him a lot. He makes
Yeah.
fun of me a lot.
He goes
makes-
after
Everybody,
Jeremy.
bro.
Yeah, he called
Yeah.
Jeremy a lot. He says Jeremy Lafufu.
He called me Pug Nash. He says I look like a pug.
I wish I was big enough to get made fun of.
I went
So-
on his stream with his friends a couple times. They're actually good people. Fun.
So one of his theories, though, he says he's investing in some China stock. Well, he 95. I did a reaction. to
Isn't
his
he
video.
like mostly VT?
Index?
Like
Yeah,
index?
95% of his portfolio is in an index, but 5% he has a few stocks that he picks, and he picks China stocks. And his theory for picking China stocks, he's comparing GDP growth, which is at what they predict to be 5% in China versus less than 2% here in the United States. And he states that the direct companies that are going to benefit from the GDP growth in China
Mhm.
are Alibaba, JD, Tencent. So that's why he's investing in those companies. And what do you think about that for investing in China in general?
You want me to answer this, or
Anybody.
I feel like I'm being fucking a
First,
Nazi
how
of
can you-
of airtime.
Can you hear now? Not react to a title like this.
Yeah.
My rectum is in taters. Baba stock, JD stock,
That was
Tencent
his-
stock,
that was his
all
title.
Chinese stocks are going to zero. That's a great title. So let's watch Mr.
He's always naked in his videos. Did you notice this?
Why is it? I've
Bro,
never
I
seen
don't
this
know.
guy before.
But
Ever.
hey, watch his intro. I just
I
made
just saw
this.
that, man. I just
Hey,
saw it.
Hey, Rick, me too. I don't invest in China stocks. But watch his intro, Tom. You got to have this energy. Finance.
Okay.
Nobody's on camera with that. Welcome back.
He knows that he's actually a smart guy. People don't realize this. He's a CPA and shit.
Fuck.
My name is Christopher Bailey. I'm a certified CPA accountant. I'm also a journal.
Dude, what is happening right now? Why is this guy's shirt off? You're
Oh.
dude, with his shirt off?
Look, I know he
That's
looks
it.
like he's crazy
off,
and
guys.
shit. He's actually a smart guy.
He-
He's a
no,
very
he's-
smart guy.
Okay, so I did a reaction. I did a fair
He's
reaction.
just really edgy, bro.
Yeah.
I just want to point out, I was the first one of the big YouTubers who gave him some clout, and I said, "Hey, go watch this guy. It's fucking funny." And he was making fun of me as well, but it's so edgy. You have to understand. Like, you look at it, and he's like, "Oh, this is like it's like whiskey. It's an acquired taste." And the first time you drink whiskey, you're like, "What is this shit?" But the more you have it, the more you like it. It's kind of his content is like whiskey. It grows on you. I can't explain it.
So check out the video I did. I did a reaction to it. So I point out that underneath all the antics, he gives great information, great
Yeah, that's
advice. Yeah, for real. So I watched it. I really laughed. I enjoyed it. I don't have the energy to act like that. But like it's a great video, man. Check it out.
Well, look, for 95% of investors, index funds is the way to go.
Yes.
To be honest, statistically, most money managers having trouble consistently beating S&P on an annual basis. Some do, most don't. So it's not a bad advice. The thing about China, look, it may be true what he's saying. It may not be true. Who knows? It's just I can tell you with the same level of plausibility, there's a 50% chance that what he said is right. There's a 50% chance that the Chinese Communist Party nationalizes Alibaba. So I don't think anybody can make an argument that the chances of them nationalizing Alibaba is less than 50%. So
I worry about that. Them nationalizing it, them being able to make CEOs disappear. What about transparency, right? Like
wait, before that, the biggest somebody has their headphones off and I hear myself twice.
I think it's one.
It's
I got my
Juan, it's you.
I got headphones right here. You guys see my headphones?
Okay, so basically,
I think it's whatever Juan did to make the video play. It's now duplicating it all.
Yeah,
Oh,
we hear it twice.
We were all
Okay.
mute.
Oh, okay. Hold on then. Let me close the thing. But let me end it. Hey, I want to know, Tom, if you can end your shows like this.
Show me, and then I'll talk to what channel.
Obviously being sarcastic.
Anyway, y'all have your laughs. I'm not scared to show it. I don't care. Okay? I'm not ashamed at all. Don't care. And that's it. Y'all have a wonderful night. Cheers!
All right, and that was Strongman Finance. Great video. Very juice. Ended with juice.
Did he say Jews or juice?
Juice, like
Oh,
drinking
okay, man.
juice. Drinking.
I was like, this is like
Drinking.
no, because
juice.
I'm Jewish. I'm very sensitive to these things, bro.
No. He said juice, like drinking juice.
I was kidding, bro. I
Oh,
was just kidding.
he said juice.
No. I am Jewish, but I know Chris's antics, bro. You remember the Dr. Tim Watley from Seinfeld?
Yes.
He converted just for the Judaism jokes, and
Yeah.
Jerry hated him for it. People forget, but this is Heisenberg from Breaking Bad. It's the same actor, bro.
Yeah. He's so young in Seinfeld.
Dude, is Bryan Cranston.
Yeah.
Anyways, so going back to China, look, people forget, but China actually stopped the biggest IPO in Asia, which was supposed to be Ant. And was
Right.
supposed to be the biggest, and they stopped it for the same reason. I think they might nationalize Alibaba, which means too strong, too big, too influential, involvement in financial systems. I mean, it's not the sort of company the CCP wants. They want EV companies, stuff like that. They don't want companies that threaten the dominance of the government, and Alibaba is definitely one to threaten. They're just too big, too strong.
You see
You know,
DD IPO like $20. It's like $2
The
right
Chinese
now.
Uber, right?
Yeah.
Some
Scott Curry
bureaucrat
actually-
decides to kill it, and they kill it in a day.
Yeah,
so
Scott Curry actually had some stuff on his channel where he was talking about if you bought shares in Neo here, you're not actually buying Neo. You're buying, what was it, Scott Curry? What was it?
Oh, I
VIE.
can explain this. The VIE structure. It's
VIE.
old. If anything, it just goes to show you how things in Chinese stocks are shit. If we're not even worried about the VIE anymore, bro. Like VIEs is like, I'll give an example. I don't want to get it deep into this. VIEs is a structure that we used to use for similar structures for tax advantages or the regulatory advantages and whatnot. But essentially, VIEs is, as an investor, you're buying shares, not in the underlying company that owns the intellectual property, the know-how, and the assets and everything. You buying a company that has contractual right to receive proceeds from that company. So it's like if I try to sell you an asset, the price would be X, right? But if I tell you, hey, I want to sell you this car, and the guy who owns the car, he's promised to me that he will sell this car to me in a month, and I want to sell you this right to own this car in a month. It's a different legal right. There's more risks involved, obviously, right? There's more uncertainty. So there's a big difference between property and contractual rights. And in Chinese companies, by definition, you're buying contractual rights. So pricing it the same as ownership, as property, I think it's a huge mistake. And I think, unfortunately, most investors don't realize that they haven't seen the VIE, which would be Cayman Island, Hong Kong, China, etc. 50 different companies. That's not even alarming anymore now. With VIEs has become the least of our problems with China, bro. China is fucking off. They're off the rockers, bro.
I
Like, what
agree.
happened with that tennis player? Did you like? or Jack Ma or Jack Pa,
Jack
whatever the
Ma,
fuck his
baby.
name is, bro.
Jack Ma, that's a clone that came back. He's a robot.
Yeah. Who knows?
Assimilation.
Look, Evergrande has exposed a big problem in China.
Yeah.
China has a massive property problem. Their whole fucking economy is built on this. China is, like I said this, somebody asked me about Gazprom 2 years ago, a year ago. I said it's worse than China, but other than Russia, which I've been very consistent on, China is, it's just too risky. The risk is too big.
Yeah. I think people just like not considering the risk as much, or they just feel like, I mean, because when you do a DCF on Baba, I did, and it's the upside is just like incredible. I mean, the revenue growth has been amazing. So
They've been also slowing down on the fundamental side, Juan. The latest was only 10% growth, which is, it's nice, but it's not like standard Alibaba stuff, and it makes you wonder why. And the
Well,
only
they gave most
reason I
of the
can come
cash
up,
to the Chinese government.
I think there's a deliberate slowdown coming from the top. Otherwise, look, a 10% growth for a company like Alibaba is very strange.
I think the economy over there is weak.
It's getting weaker. It will get a boost though from the new friendship with Russia.
Buying all
they're-
that oil for cheap.
Oil for cheap, commodities. They're gonna have their own little club of the axis of evil right now, whatever the fuck they want to call it. And they'll, if China can play a double game, as basically not alienate the US anymore, and keep Russia as the new best friend, they might come out of this as the big winners of this whole fucking crisis. If so far they've been really good at basically not saying anything to anger the US. They have no dirt on their shoes so far. They've invested $0 in this conflict, and yet they seem to be getting closer to Russia at no expense of losing any US business, which is not bad for them actually.
Anybody answers Rick questions here?
Oh, Evergrande. It's the Evergrande question. Everybody asking about this. I don't know for sure, to be honest, guys. Obviously, there's always it's a global market, and I'm sure U.S. banks have exposure to the Chinese real estate market. I honestly don't think it's thesis breaking kind of level of exposure. I'm sure they have money over there, but I mean they're not idiots. I hope. Maybe I'm asking too much for bankers. I don't know. I honestly don't know. We're about to find out. That's for sure.
Any last minute questions, last minute statements from our panel here? No. All right. Well, thanks again. I really appreciate you guys coming on. Tom, Stock, Penny, Sean. Great conversation.
Hey, can you pull their channels on the screen right now? I also want to subscribe myself because
Yes,
I'm
yes.
subscribed to Sean, but not to the other guys. I want to subscribe right now. Real quick.
Absolutely. Let me
Let's
get
put it on the screen. There's a very rhythmic tap going on. I like it. Maybe it's only on my end.
Maybe. I don't know.
Okay.
It's either Tom or Penny because it's the mics that are open.
Somebody like beating their meat or something.
I was about to say it sounded like cheeks are getting slapped somewhere, bro.
Man, I was trying to avoid it, man. I was thinking it in my head, but I was trying to avoid it.
There was a guy who lost his job for something like this in the Zoom. I forgot his name. A famous guy, and he thought the Zoom was off.
Oh my god.
Or the
Imagine,
attorney
bro.
that was a cat.
Imagine. Bro.
So we got
This.
I'll tell you a
CEO.
funny story. I used to have a roommate. I'm not gonna name it. Nobody will know. So I came back one day. I walk in the front door, and I see this motherfucker running through the fucking hall naked. And I was like, so I waited a few minutes. I go to the room. I said, "Motherfucker, what just happened?" Nothing. And I was like, "Why were you running from my room?" Fucking naked. shit across the fucking department. I just want to know. Just tell me, because I want to know exactly what happened.
And he was
So
alone. Huh?
he ended up not saying I had to throw out all my fucking furniture, burn every fucking sheet I had, bro.
Oh man,
Yeah, man.
he was thinking about you.
I don't know. I don't know. Okay, so can we
Well-
see the channels?
Roselle, edit that out.
Roselle is not here to
Stock
edit your shit
Curry.
out.
Go ahead and subscribe to Stock Curry.
So
Stock
we
Curry?
got Stock Curry here.
Let's
Is
go.
pumps out videos.
Oh, congrats. You got 54,000 subscribers almost. Nice.
Yeah, started talking about you, and everybody started subscribing.
Yeah, he started
have-
using. He started saying "juice" at the end. And blew up.
You're gonna get
if I
banned
used
from
views,
YouTube
I'd have
for this, man.
100,000.
Yeah, we
Hold
got
on.
Sean from We Are Investing. Sean has
Yeah.
great tutorials, man, like on software and different stuff, like Weeble tutorials. Just a lot of great videos that are gonna have like longevity.
Oh,
like,
Stock Curry, I'm subscribed to you. I kid you not.
huh?
Sean, I just subscribed to you.
Yeah,
I
gotta
know, I didn't
subscribe to you
know.
guys.
I was subscribed to you from before. Why?
He was talking
I
about
think
you.
I've been independently enjoying your videos and I didn't know this. I'm already subscribed to you.
And we got Lucrum Investing, Discord, a lot of great resources here, really cheap. Got news articles, guys that comment on options, trading, crypto, NFTs. They go live if you day trade. It's a little bit of everything. I post videos here too. I'm on here. So
Penny
great
Slayer,
stuff.
what's your channel, or do you?
Oh no, man! I'm just the Discord guy, man. I'm
Just
just
the Discord.
just the community manager, if you will, right?
Gotcha.
Yep.
I think that's for Tom. He was thinking about you.
Sean, you know I'm not subscribed to you. I don't know why.
No,
I've been watching your shit. I think I know. I was angry at you secretly for you saying that I shouldn't use DCF or startups, which is true,
For,
by the way.
for
That's true,
Lordstown
actually, yeah, yeah.
Motor.
No, Lordstown Motors deserve that beating I gave them, bro.
Man, I've been
Yeah.
short Rivian so bad. Dude.
Yeah, but
Rivian's awful.
DCF for growth companies, it's a very, very limited. I mean,
You have
honestly,
to
you
try
should
to
not-
project everything, and it's so hard to do.
Yeah, growth companies in DCF, it's like trying to shoehorn a penis into a fucking shoebox. It's a very potentially dangerous assignment, bro. You never know how it's gonna end.
No.
We're in there with this guy's face. Look at.
He's definitely trying to shoehorn the penis into a shoebox. Bro.
Bro, he's so energetic, bro. I enjoyed his video, man. I was like laughing, but he, like I said, it's antics, but he drops gems.
I like it when he says I'm a certified CPA accountant. I love it. It just makes me fun, bro. It's just so
That-
funny.
That's every intro. Certified CPA accountant.
CPA
and
accountant, yeah.
and he talks about his book, getting his book that he has. And he calls,
His book is not bad. I bought it
yeah.
on Amazon.
I wonder if he calls Jeremy. He makes fun of Jeremy. He had me. You know, he did a live thing with Meet Kevin. He was making fun of Meet Kevin so much, and actually Meet Kevin and him streamed.
Was it good?
Yeah, it was good. It was good. But he wasn't like he didn't go crazy, but you know, he went at
I
Meet
mean, you
Kevin. a little
can't.
bit.
If you invite somebody on your show, you can't just fucking.
Sabotage them.
No, you can, but this is gonna be the last time anybody would ever agree to come on your fucking YouTube channel if you do it. You
Yeah.
can't just. It would be counterproductive also to get any sort of meaningful discussion going. Besides the fact that everybody will think you're an asshole, nobody will ever come again, and it's just gonna be a fucking CoffeeZilla screaming match. It's not gonna be like a.
But then it's like how do you balance, right? Like being respectful.
You have to be really delicate about it, bro.
because you got to ask the hard questions, or people are going to say you sold out. And
Yeah,
you
but you got to do it in a way that doesn't antagonize the other party. It's
Yeah.
very hard. It's a
But
delicate balance.
like I watched yours. I don't think you were offensive to Meet Kevin, but I don't think he liked it after he left, right? I mean, he felt like you went at him a little bit when you went with
No,
Meet Kevin.
because I just told it. Look, there's a difference between. I wasn't offensive, but I told him to his face. I said I think your course is less valuable than what it was a day before you pulled the stunt. I think you should just apologize and you'll be fine.
But obviously he didn't
Yeah.
like that.
Yeah, but I wasn't an asshole about it. I
That's-
didn't say he's.
It-
I
And that's my point. Even if you like
But on the other
respectful in
hand,
a
I
way,
made a video a day later saying I think people are just too hard on Kevin. And I made a
Yeah.
video and everybody said, "Oh, you're kissing ass to Kevin." Some people said Kevin must have paid you to do this. Like, motherfucker, you know how much money I got offered to do fucking sponsored content in my time, bro? Like, I will not. I don't know exactly how hundreds of thousands of dollars if you combine them. Like, you see this. You guys probably get this fucking inbox all the time.
nah,
Like,
bro. I got 4 subscribers, man.
you'll see when you get bigger,
Um,
bro.
We
Fucking
get hit
crypto
up in the Discord.
shills.
I don't know if Sean, you have a Discord too, right?
Just for Patreon, just to keep it tight.
So man, we get hit up all the time in Discord. You know, my business does anyway, and we shy away from that stuff, man. We're all about, you know, educational and getting into some day trading if that's what people like. But you know, Tom, you're a long investor, right? You love your long-term stocks.
Yeah,
give me
definitely.
one stock. Give me one Tom Nash stock right now. What's Tom Nash looking like 10 years
You're
from
not
now?
really
Give me a
asking me
10-year
this.
stock.
Yeah,
No,
no.
you know the answer, bro.
Other than Palantir.
Other than Palantir, more Palantir.
Yes. It's great.
I'm not flaky about it. People like the people who are on the bandwagon for the views, they're off now. Now you get to see who's actually naked or who's been swimming with the bathing suit, bro.
Yeah, Tom,
I
I'm
have
not gonna fake.
zero fear about Palantir, bro.
I bought 500 shares of Palantir at 10.59. I think I'm all right.
I think you bought at the bottom, and yeah, good job, man.
Thank you. Thank you.
Look, I don't want to. Everybody knows my opinion about Palantir. Go look at the. There's a very interesting chart that shows you the development of the price versus the development of the institutional ownership. And you can see right there. Juan, you can probably if you go to my Twitter, I
Yeah,
think I
hold-
tweeted this chart out maybe 2 or 3 days ago.
Okay, let me check.
Follow me Twitter. Follow the guys who try to.
The shameless Twitter.
The shameless Twitter, the Twitter on my Twitter. Anyways, no, I'm not doing this. But there's so the price have been dropping like from mid-November, so high 20s, and you can see the drop in price, and there's almost inverse line that's going from bottom up of institutional ownership, so it's going all the way up. The reason being, that's the one. That's the chart. You can pull it up. We can look at it together. So look at the price. So this is like October 21, and then you can see the drop in price, and the green arrows or columns, sorry, they're the institutional ownership. So there's total of 2 billion shares, and these are in thousands. So you're looking at the institutional ownership went up from about half a billion to 740,000, while the price completely dropped. So there's a big increase, like what seems to be like a 40% increase in institutional ownership over the course of this dip. So
Do you, is the
factually speaking,
is
go ahead,
the
Juan.
is the increase attributed, do you think, to value price drop, or just like people are like reevaluating and kind of understanding what Palantir does and now see the potential?
No. It's these are sharks, bro. These are institutionals. They have all the information. It's just the institutionals factually have been buying the dip. So the question is why? Is because they're saying what my friend Justin says. He's a Wall Street guy, and he says, look, even if you absolutely hate Palantir, it's a $22, $23 stock at minimum. Even if you fucking hate the business, if you think it's a total flop, just it's the bare bottom of the stock where it should be. So they're all saying, well, look, at $12, I mean, why not? Let's fucking buy it. And let's resell it to the same idiots that's selling now at 22 when they're back on the FOMO train, which that's how institutionals work, bro. They'll buy at the bottom, they'll be patient about it, and they'll sell back to you, the retail investor, when you're all fucking FOMOing back in.
Kind of like those contrarian investor type guys.
And that's how they do. They're really good at being greedy when everybody's fearful. I mean, look, the other part is, and this is also very good for the stock because Palantir suffers from one big flaw, which is it has very low percentage of institutional investors, very very low, and it's a sickness, it's a disease. I'm sorry for all you retail investors. You're my friends. I love you all, but you're a fucking disease for a stock, including myself, because us as retail, and I'm included in this group. I'm not an institutional investors. Us as as retail investors, we tend to be flaky, volatile. We tend to be much less confident and shorter term investors. It's just statistics about retail investors, and I'm included in this stat, right? Institutional investors offer more stability, more long-term investment path. They're more liquid. They don't mind taking a virtual loss if they know the big money is coming. So their appetite for risk, or rather their tolerance for virtual loss, is very different from a retail investor. So they don't really sell on a bad news day. It's a pattern of behavior that's very different. If you go and you look at the good stocks in the market, like Nvidia or AMD or some of the prime names, right? You'll see that it's 60, 40, 70, 30 in favor of institutionals. When you have high retail participation, it's like my friend Fabio said, that it's the canary in the coal mine. It's a bad sign for the stock, because it means that the smart money isn't there. In the case of Palantir, the reason that this is happening is because they went public through a process called DPO, which means direct public offering. When you do a DPO, what happens is you offer more parity to all the investors, and everybody's starting. So there's no advantage to institutionals. Everybody's buying in the secondary market. The problem is you don't have the traditional process. I don't know if you guys ever participated in IPO from the issuing company side, and I have. The way this works is that it's a very long process, and you do these roadshows, and you get people to sign on. So these big banks, they'll just buy chunks of shares, and they'll give it out to their best clients. Depending how good your company is, the better clients will get the better deal. So you get out of the gate of the IPO with massive institutional ownership, and then the retail investors starting buying in. With the DPO, it doesn't work this way. I don't know if Palantir does a DPO today, knowing what they know about what a DPO does to a stock. It's not as bad as SPAC, because SPAC is cancerous to a stock long term, because basically you just loaded up a shit ton of money of people who don't give a shit about your business. It's not as bad, but it's probably a distant cousin of a SPAC as far as the cancerous effects on the stock price behavior long term. Maybe if they know about this, they go IPO this time. I think they had noble goals with this. Basically, let's give everybody a fair chance, a fair crack at this. And also, don't forget, they had 17 years of illiquidity, which they wanted to offer everybody. And but I think that's what causing a lot of the pain right now in the market. Is retail is coming out, institutional is coming in. Yeah, it's in my don't touch, don't worry about it portfolio. I don't mind.
Yeah,
It's been doing it's been
30%,
probably
right?
it's been dancing 11 12 11 12 for the past you have more, probably a few more months to buy it at cheap price, I think. Yeah, that's painful.
Yeah, in the technical world, we call that a falling knife.
Yeah, where's that 1059 at? Where's that? It's looking good.
It's not only in the technical world, in the real world, we call it a fucking disaster, bro.
Yeah.
It looks like a fucking yeah, it looks like the opposite of I was about to say a dirty joke. I can't do this. We're live. It's not a good look, bro.
Yeah, if you
Yeah.
run a Fibonacci retracement on here, your bottom is pretty much right around like $8.70 or $9, and that's literally the bottom of the Fibonacci retracement. You go any lower than that, any lower than about $8.70, and you've got to draw that sucker all the way down to 0 to get it to match up with support and resistance lines.
Wait, how do you do
I don't see it getting any lower than $9.
How are you doing the Fibonacci retracement? Because it IPO'd at like, or direct listing at like 750.
Yeah, when I ran it, I just ran from the top, and then And like Juan here has all of his support and resistance lines. So I started at the top and I just pulled it down until I had pretty much all my support and resistance lines lining up with that Fibonacci retracement. And if my bottom was right around like 870, then I got all the support and resistance lines to line up with how the chart's actually been trading. And the only other time I got all the support and resistance lines to line up is if I put that sucker at 0.
Yeah, I never did it that way. Good to know.
Look, whether you like what they're doing or not, they're very well suited for this new reality that we have,
Yeah, they
both
thrive
on their
on war.
government business
Oh, yeah.
and on the commercial side. Because the one thing that Palantir had over the years, they had a major problem with European marketplaces. Europe is basically what just happened with Germany. Very liberal. Oh, we don't spy on our own people. We don't need military. We're peaceful. We don't. Let's just kumbaya around the campfire, and they don't like. No, Palantir is kind of intrusive in that manner because, like, at least on the government side, it seems. Now Germany is militarizing. Right, they're basically they're going. Okay, now we have bigger problems than staying as liberal as before. We need help. So that on the government side, plus Palantir thrives in times of chaotic realities, as far as supply chains, as far as making sense of a new situation which is unclear. It's kind of what they're known for. So if you look at what's been going on for the past 2 weeks, I see it as a very positive catalyst for the company. But nobody will see it for at least a couple of more quarters until we get some traction going. As far as what would be curious to see from you guys, I don't know if you followed it to that resolution, but I look at the commercial growth for rest of the world for Palantir, and that's the Achilles heel of this company. Because they're really good in the US, ROW growth is that would be interesting to see, right? Q2 2022, which is not even started yet, right? But to see what's going to happen in Q2 2022.
I
Talking
think
about
it's going to take a long time. I mean, just like Germany, where they're like, oh, crap, we need to actually have a military and we need to get off Russian oil and gas. And it's going to take, 5 years minimum. And
Money is
you
going
take
in
it-
now, though. They
It
said
is, but it's
this
still
year.
going to take time. I mean, every commercial bank and governments are now like, okay, let's go get on Palantir. But won't those contracts take years to play out? You think it's just going to happen all at once?
I think military stuff are tend to move faster than commercial stuff in general because of just the reality of things. I think Germany committed $100 billion just this year on extra military spending. I'm sure some of it will go to cybersecurity and stuff like Palantir. As far as look, there's a really good presentation circulating with Palantir onboarding process and the time frame for that. If you want to get on Palantir, you can be already in the system working with just customer support within 3 to 6 weeks. That's the onboarding time for the software. And they show you how it works. So week 1, week 2, week 3, week 4. So there's the whole time. It's the process they've showed with Skywise. So let's say Skywise seems to be a little bit more tailored for so add a couple more weeks for something that's not Skywise, because Skywise basically is not industry agnostic, right? It's specifically for the airline industry. So let's say you're talking about not about Skywise, but specifically Foundry. So let's say 2 months onboarding, another month for for them to start. Yeah, probably 3 to 6 months until you see actual traction. And that's probably realistically more 3 to 9 months. Because you need to sell it, you need to onboard it. Yeah. I'm sure they don't have a sales force in Europe at all because nobody was buying their shit in Europe. You need to recruit. Yeah. But if you're a long-term investor, you're very excited, I think, right now about their prospects for sure.
Yeah,
Are they-
our company used to try to go against them. So they were going after some contracts that we were going after for a certain sector. And they're just too big. They're just too good at what they do. So they definitely have a very good moat built. If they can just get the investing part figured out, I think that's going to be the key for the company. And then also, getting those contracts and making money on those contracts is going to be huge.
I think they need better marketers.
Yeah, let's see what happens with Palantir. Palantir, there's only two things certain in life: death and taxes. Apart from that, nobody fucking knows, bro. Palantir might end up like a toilet paper, or it might make me very rich. Honestly, in both cases, it would have zero effect on what I have for breakfast the next morning. I honestly am fine. If people are betting their less money on an investment, they should not be doing that in any company.
Hey Tom, if you lose a lot of money in Palantir, can your next video be my rectum is in tater? I lost all my money in Palantir.
Dude,
How did he look? How did he get this picture? Like, if his hands behind his back and he's naked. Who took this picture?
Oh, well, you can do like on your computer, you can do like timers. So you just click it once and it just takes multiple pictures and you choose the one you want.
I like how he stole my thumbnail for the I can't believe my eyes Baba stock under $90. That's my classic thumbnail.
I really just like, I actually like when I was doing
This
a
is
reaction,
bad.
when I did a reaction on my like I was looking at the title and I was trying to figure out what was his mindset when he came up with the title, My Rectum is in Taters. Like I couldn't figure it out, man. It was just like,
he's a comic genius.
He is, bro. He's funny.
He's
man.
so edgy.
Yeah. And no shade towards him. I did a positive review on this video. It was I mentioned that I kept reiterating that. Forget the antics. Just there's gems that he drops. I mean, the guy's knowledgeable.
Yeah, man. He's funny as fuck. I like him a lot.
Juice.
Every time you say it, I hear something
time
else.
to go.
Yeah,
I hear something else.
Oh yeah. No. Yeah. Roselle, erase that.
Okay,
all right,
then.
guys. Again, man, thanks for everybody. Great panel.
Juan
great
is too
discussion.
nice, but I'm gonna tell you. Like,
Okay.
You know how people are staying over too long in your living room and you want them to go home? Like, get the fuck out.
No, man. No, I'm good. I love it, man.
When you ever had this friends that are over and like you want them to leave already, but they won't go. You're trying to chase them away with like being just polite and shit. Like,
one more drink. Nah, no, we're out.
No. If you're in my
house,
house,
bro, I learned this from my dad.
I would never make you feel like you have to leave.
No, that's your mistake. In my house, and I learned this from my dad. If I want people to leave, I just say, no, everybody, it's been fun, but get the fuck out. And it's as simple as that, bro.
Well, thanks, Juan. Thanks for having me on, man. Had a great time today, man. Tom also, and Sean and Stock Curry, man. Thanks for having me on, man. It was great conversations that we had today, man.
Yeah, absolutely. We got about two or three more sessions left.
Hours.
Before we finish.
Kick back. I need to refill my coffee with whiskey.
Before we finish the cuss, we still got to go over NFTs, how to make money with NFTs, metaverse, how to profit from the metaverse, and we just got like one more trading session left.
Dude, I can't wait for that one because listen, I bought one NFT my whole life, and then I also stole two. So I'm interested to see how well the NFT thing is going to go, man.
Yeah, how do you do this? That's a topic for next week.
We need to have that. I'm going to watch that one.
Yeah, I thought the whole purpose was that it can get stolen.
Well, if you make a video titled "How to Steal NFTs,"
you're
gonna be viral,
right?
bro.
I mean, it's just you just screenshot it. That's it. Then you got it. You stole it.
And you make your own.
And then you just make a video how you right click all of them and just like look at me stealing here.
Copy paste, bro. That's all you need.
And then put it on the blockchain.
Yeah, NFTs, bro.
Forex. I don't mess with Forex much.
When Forex sesh sound like something illegal in certain countries, bro.
You know, it's funny. Everybody says they don't touch Forex. Anytime you buy and sell crypto, you're doing Forex.
It's true.
Yeah, listen, if you want a Forex guy, we got a Forex guy in the Discord, man. I'll see if I can connect you if that's something you want to do.
Anybody interested in Forex, check out Lucrum Trades.
All right.
Okay, fuckers, get the fuck out.
All right.
All right, guys.
See ya,
Take care.
Tom.
Thank-
Bye,
Do we do
guys.
the intro? We do the intro?